And we're live.
All right. Glad we could finally make it. I do see a comment on didn't happen on Friday. That was my fault. Wasn't filling up to either stream. And so, of course, the guys gave me grace. But today is another day. Bootleg Weekly. How are you, Tevis?
Doing good, man. Doing good. Another day in paradise, as they say.
Yeah. And I think you've shared where you're at, correct? With publicly or
Yeah.
not? Yeah.
Oh, yeah. No, everybody knows.
So GPS coordinates and everything of exactly where you're staying. And yeah, good. I have a question for you before we begin. So, like, you're traveling. At least when I'm traveling, I feel out of sync as far as everything that's happening in the macro, happening with my stocks and everything. Do you like? How do you manage that? And like, actually, are you like paying less attention, but you'll still get the headlines? Because I mean, you're like catching things that I'm missing. So, and there's a lot that we're going to talk about tonight.
I still think I'm doing poorly at that. I will say that, like, I do think there is some diminishing returns to staying in front of your computer all day long, because generally speaking, there's like 2 or 3 main headlines per day. And whether you log in twice or 3 times during market hours versus if you're there refreshing every 10 seconds, the incremental piece you're going to get uh, is not the same as the time you put in. That doesn't linearly correlate. Um, the content that I've been making though is drastically suffered. Like, I haven't been making as much. If I look at my analytics, it's like 50% less than last month in terms of views. And so I can, like, yeah, exactly 50% less. I can already tell, like, it's going to be a bad month from um, views perspective, posting perspective, but generally I'm trying to still keep on top of it. Um, it doesn't help though, because I actually have like more of a life outside of the computer.
Yeah.
Um, yeah.
Yeah, it's hard to keep up, at least when I'm traveling, and especially with the content. Like I have to pre-record stuff, otherwise it doesn't get done because I want to touch grass. I want to enjoy vacation. Nothing wrong with that, especially if you're in stocks that you like long term. It's like, yeah, like Robinhood goes up or down. It's like it's still a great company. Palantir, SoFi, like whatever.
It's so fun
Um,
to record with like the niche that we're in, because like the news cycle is so short. Um,
dude,
and it's just like, if I'm gonna make a video, I'll make a video 3 days later than everybody else, and they'll be like, "Yeah, dude, we know, like, it's old news at this point." Like, "Oh, okay, well, it doesn't."
yeah. I think Okay, so as a primer, Bootleg Weekly, just as a reminder, in case there's any new viewers at all, as well. We have a lot of topics we're going to cover tonight. We'll talk about SMCI a little bit here tonight. News last week: OpenAI, Palantir, CowGPT, Tesla, Robinhood, Clarity Act stuff and ramifications for BMNR, SoFi, a figure as well, and maybe a little bit of VG and macro too. And towards the end, we're going to have a Q&A period. Doesn't have to be related to anything that we've discussed, but be prepared. We're going to be honest with you guys. If we don't know something, we're just going to say, hey, we don't know.
The people still
so,
remember 30 rolls of sushi in one sitting.
oh
Um,
man. I like sushi, but not that much. So,
I haven't had sushi in like a month. It's been crazy.
yeah. Now you got tired of it in Japan, but like, are you at the point where you? No, you didn't. Wow, I
You
didn't.
don't get
It was
tired of it.
ramen. That's right. It was ramen. Yeah,
You don't. Yeah, I want to go back to Japan. Honestly, I could totally see myself doing another month in Japan. I might,
man.
quite frankly. I don't know yet.
It. Yeah, I got to go sometime. Like anyway, lots of news to cover tonight. Where do you want to start? Dealer's
Robinhood,
choice.
Robinhood news.
Robinhood. All right, I'm wearing the Robinhood shirt, so yeah, we can definitely start there. So there's some news related to Robinhood, especially after hours as well. So Robinhood is, of course, a stock that we're both in. I own. It's actually right now probably not my largest position, but that depends on the day. It's like Air or Robinhood. And if Air has a really good day and Robinhood doesn't, Air is winning and otherwise it's not. But Robinhood itself, of course, announced something that was of interest is after hours here recently. And specifically, they are authorizing a $1.5 billion share repurchase. And so this is an additional authorization of 1.1 billion, just so it's just kind of rounding it up. And I've made a couple of posts over the last month of like hating some buyback programs just because they're tapping into debt. And they have been tapping into debt for years. This is Fiserv. This is also FICO as well. And there's a lot of others too. And they were buying back huge amounts of shares at significantly higher prices. This is the opposite. Robinhood has a ton of cash. They generate a ton of cash as well. They're growing rapidly. I actually had a post earlier today talking about this disconnect that we've seen in the market. It's down 50% from its peak late last year. And a lot of that has to do with, like, there's a couple things going on, right? Probably got ahead of itself. I don't know that it deserved to be trading in the 150s. I thought it was a little bit rich, but I didn't sell any, of course, at that time. But nevertheless, a lot of it has to do with this blue thing here. So this cryptocurrency, this is from Fiscal AI. So rather than pull it up live, I've already got it here. Crypto revenue as of this last quarter is just a little bit over 10% of their entire revenue. So selling off a stock by 50%, largely because, hey, crypto is in a mini crypto winter or crypto winter or whatever. I mean, it's a very different position than when Robinhood was back here in the previous cycle. So markets tend to overreact on both sides. We saw it overreact on the upside. It's overreacting on the downside as well. We can be here for a little while. I've not actually bought in, but one of the things I noticed, and then we'll talk about the buyback piece. This is from Artemis. There's a couple of different places where you can look at this. This is just spot volume based on what's trading on Kalshi, which again, this is not all Robinhood's revenue and trading, but it's about maybe 25 to 30% is Robinhood. And the predictions market itself was, they said last quarter, at a $300 million annual run rate, which is pretty insane if you think about it, because it's not really existed that long. It's growing rapidly as well, like it or not. And there is some other predictions, market news. There is actually a bill that's being floated to try to ban sports betting, which this is not all sports betting, but like honestly, over 90% of it for Kalshi is sports betting. Polymarket's a little more diversified. Robinhood, it's mostly sports betting as well. And they want to ban it. Now, but anyway, we'll definitely talk about that. But Robinhood is buying this at much more attractive valuations as far as a buyback. And they do something that's really interesting too, where it's almost like they have a team of people that actually understand the markets well and understand technical analysis, understand the macro, and they know when to buy a good dip. Because, yeah, exactly. Not every single quarter, but a lot of quarters, if you look at like the average price that they actually buy back, it's not like that they're just buying back the same amount every single week. They're like, oh man, it really fell. Yeah, we're just going to send it. And then they buy back a huge amount. And I love that as a shareholder. So a lot better buyback program here. But yeah, this is not a company that's just going to drop revenue off of a cliff. We might see this retrace some, but we're not going to go back to where it was in like 2024 or even probably 2025. We'd have to see a lot more pain in the macro. So I've not bought any yet. Have you done or changed anything with Robinhood? And does any of this change your mind on what they've been actually building and doing?
Yeah, I mean, it doesn't really. My position in Robinhood remains the same as it was. I haven't been doing any adding to Robinhood. I'm not against adding to Robinhood. Every time I have money, it just sort of gets trumped by other things that I want to buy, in a bigger way. So it's sort of in that weird no man's land. I think it's also like kind of self-perpetuating to some degree because it's such a small percentage of the portfolio. I think about it less, or it gets less of a priority, and as a result, it always stays as a small percentage of the portfolio because the bigger positions get an outsized sort of like mind share. In terms of the 1.5 billion buyback, I think it's obviously bullish. It signals that they're bullish on their trajectory. And I think you nailed it. Like last time they were buying stock was like what, $40 a share, something like that. And the stock did a 3x from the levels that they were buying, and now it's back to $60, or sorry, $70. Um, Broke under 70 actually today, but yeah, I think it's a good spot considering their growth rate. I think the prediction market stuff is interesting for us to talk about, maybe as a secondary piece related to this. Um, but maybe you want to address this point because I think this is an
Yeah, yeah.
interesting. Hood has been
Let
issuing more shares. Superstar says outstanding shares has gone up since June 2021. Um,
I mean, you're technically correct, but you're talking about such a small amount. Essentially, like this is looking from September 2021. Have they increased the amount of shares meaningfully? No, in fact, it's actually down from the peak in June 2023. Basically, the buyback program is not so much there to reduce the amount of shares; it's there to offset stock-based compensation, which is part of what they do with Robinhood. The employees that have worked there and worked hard actually, frankly, deserve it. But no, like this is actually down from the peak. It's very, very stable. There's few companies that you actually look at that are growing the rate of Robinhood that just have a float that just right around that 900 million. So yeah, strong disagree right there. And this is, by the way, I should also mention, they've done a bunch, and I mean a bunch of acquisitions in this time. And so they're able to do that with capital. They were able to do that with the cash that they're generating as well. So this isn't a company that they're just going to be like, okay, we're going to double or triple our share count in the next few years. That's just not going to happen. So yeah.
Yeah, and if there's Spanish music playing and singing in the background, that's just my neighbors. So I apologize if that comes through the mic. Yeah, I don't know. I haven't been kept up to date with the sort of prospects that Robinhood has for 2026, and then I know tokenization is going to become a bigger and bigger piece, and I think that's been on both of our radars as a big catalyst for Robinhood. I wonder how this news now changes things, where if there is an outsized risk of prediction markets getting banned or labeled as sports betting and then heavily regulated and or restricted in states, then obviously Robinhood will have some trouble there. You could argue tokenization, could rebrand it to some degree, and they'll be fine. You could argue that this is never going to go through, and they'll be fine. But we're getting louder and louder voices, it seems, every day with regards to this. As much as they want to call it like events contracts and allows traders to keep up with the weather, it's like, come on, man! Like I'm putting a parlay on a basketball game. Like that's the major use case here.
Yeah. I mean, like it is what it is as far as prediction markets. I've talked about it in the past, and I've been, even as a shareholder of Robinhood, I'm like, hey, it's been accretive. I didn't expect it to be this accretive, but I've always wanted it in a separate app. It's not going to happen, and there's many others that have followed suit as well. And at least at this time, I think that there's a 0% chance that any kind of a bill passes. The administration has made it very clear that they want basically open season on predictions market. Frankly, there's under regulation, that there needs to be some other regulation that actually happens here. Now, Kalshi and Polymarket, and I'm going to pull up a post here on the Polymarket that we shared, have taken steps basically to mitigate some of the issues that they've been having with predictions market. Some of it's not been well received. We talked about in the past, like did Venezuela constitute an invasion or not? Failure to pay out with the Ayatollah's death, and then saying, hey, we don't actually pay out for death. It's just if he's removed from office, which, I mean, like, how is that going to work? You can't impeach the Ayatollah, I don't think, in Iran. So it was a little bit silly, but okay, yeah, I've got the post here. But yeah, with the administration right now, like there's a 0% chance, especially if you look at where the Kushners are positioned as far as it is with Kalshi, especially. Likely there's people that are in the administration, like it or not, who are benefiting from this. So a couple of things. This is from this week. Tariq Mansour, he is the CEO and founder of Kalshi, ex-Palantir employee, by the way, added some new guardrails, screen and block politicians from trading on their own campaigns. Very good. Screen and block athletes from trading in their own leagues. Also very good. And that they ban, monitor, and enforce against it. There's a lot of other stuff as well that they've added. For a while, there was like no or very little trading prohibitions, but I've not used predictions markets other than the one hedge against the Clarity Act not passing this year. So I don't really know in app. I've not seen as much in Robinhood just because I don't use that. Oops, that's not what I'm supposed to be showing. And here is the other that actually came out earlier this month with Polymarket, who tapped Palantir and said, "Hey, we need some sort of technology out there." And Palantir is great at this, connecting the data points, trying to figure out when people are trying to bypass this sort of agreement that you see with Kalshi. Polymarket has similar features as well. So that's healthy. There's more regulation and clarity that's needed on that front, but an outright ban, especially of sports betting, is just, it's not going to happen. It's not in the cards. Maybe there's impetus by the next administration, but yeah, I think that there's like a zero, honestly, it's a 0% chance. Like if there was a prediction market on that, I would love it. Especially if it gave me some good odds. I might actually bet on that. So
I think putting a 0% chance is aggressive. Like I get the entire cases to say like, hey, it's not likely to be banned. It's like integrated now in sports. There's obviously some dependency, like for tax revenue, states become dependent on windfalls from legal betting. But I think like it was banned up until recently, and that being sort of overturned is what sort of opened the Pandora's box for all of these prediction markets. And the fact of the matter is, it's going to be incredibly difficult to crack down on prediction markets. I mean, we have the SEC for equities, and even they are not entirely perfect. Like there's so much manipulation that goes on in equities, which is very highly regulated. And now you're going to tell me that like, oh, politicians can't do a prediction market on stuff that they're involved in, or coaches can't do a prediction market on somebody that they're coaching that's competing, or like it gets to be so incredibly hard to police this. And there's always going to
Palantir.
Sure. I mean, but even with Palantir, like there's always going to be those who try to abuse the system. Like what is it like Claude, OpenClaw, and Claude Dispatch, and all these Claude Code, they all launched, and one of the highest use cases, one of the first use cases that people wanted to do was build arbitrage bots and prediction bots and scanners that checked Polymarket for new accounts with 100% win rate and insiders. And it just becomes such a weird gray area that it taints the entire space with a bad reputation. I'm not saying that that's going to cause like a crackdown, but it's going to increase the murmurs of regulation, which is really hard to do. I would argue it's way harder than equity markets because of the wide range of different prediction markets that you can just make your own market for something. And it's like, how are you going to police when people can make their own markets?
Yeah, there's two things that are preventing like an outright ban or a ban of just the sports betting specific and predictions market, at least for now. One, I believe it's a DTCC commissioner came out. This is a month and a half ago. I was looking for it, didn't find it. So double check this, but basically came out and said regarding the state level lawsuits, which are happening, it said, these are happening, like it or not. States are on the wrong side of this, and we will pursue legal action to make sure that these go through. So it's not just them saying, we'll let the states work it out. No, this is happening, whether you like it or not, states. The other aspect, too, is Trump has been very clear. People in the administration have been very clear on prediction market. There's a lot that's not clear right now, and we're going to talk about some of it in relation to VG, Hormuz, and all that. But on predictions markets themselves, they're just like, hey, we're going to let this happen. We're going to let this play out. And so in order to overturn that, what this bill would actually need is not just to be able to pass, which is pretty unlikely given the Republican and Democrat split and how these are regarded. It's also not a high priority. But if that bill ever was passed and it landed on Trump's desk, I'm pretty sure he'd use a presidential veto, which would then require a 2/3 vote in both the House and the Senate to overturn the veto. There is no way and 0% chance of that happening in Trump's time. So, yeah, 0%, I'm going to stand with it. Like, technically, maybe a 0.0001% chance, like 1 in a million or something like that, one in a, whatever. But yeah, it's not happening. Next administration, with maybe a very different makeup in the House and the Senate, more time playing out, especially if Polymarket, Kalshi, Limitless, and the others that are in the space don't do a very good job of self-regulating. And frankly, they shouldn't have to. There should be clear parameters put out there by, for instance, the DTCC that's like, these are things you absolutely cannot do. That'd be welcome. That'd be a good thing. But yeah, right now, this is a huge source of revenue for Robinhood. And so the 300 million annual run rate, like I was actually thinking of that today, like crypto, assuming it puts in what it did in quarter one, like we're looking at $800 million. It wouldn't surprise me, especially because we've not seen a fall off despite the cyclicality around a lot of the sports betting, which is a lot of what's happening with Kalshi, with Robinhood as well. Could we see predictions markets hit not 800 million for the year, but an 800 million annual run rate by the end of this year? That's actually possible, especially given that Robinhood is partnered with Susquehanna for the Rothera predictions market, which one of two things is going to happen, maybe both. So as they release or they launch that platform, they no longer have to partner with Kalshi. They will probably on some things, as well as their other partner as well for the predictions market. But instantly they can double their revenue from it because they're not paying Kalshi half anymore. Just about half anyway, just about double. Or they can actually lower the take rate and take market share, which I think is more likely, especially initially with the platform. So either way, like we could actually see the annual run rate of predictions markets exceed the annual revenue of crypto this year. That doesn't mean that they have more again. It's just the run rate. And I'm curious what Tanner thinks on
that. Yeah. Okay. So Tanner said, prediction market, what stock will Tevis talk about next on YouTube? I only talk about 3 stocks. But this is exactly my point, because if I saw that prediction market, I would bet everything on the anything else, and I would just make a video about Lemonade next, or a video about VG or something, or a video about Claude. Here's my next project with Claude, guys. Like I made it, a couple of weeks ago, and nobody would be any the wiser because I've done that. I've broken that pattern before. And I think the wider point being, if you're not going to ban it outright, then you need to formalize the regulation, because right now it's a shared responsibility between the CFTC and the SEC. But I think as we move towards tokenization, you cannot have this like patchwork of state versus federal, and it goes state by state with different jurisdictions. It just needs to be formalized, man. And I don't know if people are like, let's hold off until it's formalized because it's the wild, wild west and there's money to be made before they crack down, or whether the true adoption is going to come after it's formalized. But that needs to be a necessary step to add some legitimacy here. And look, this is exactly the same as crypto, right, man? Like, people are still clamoring for regulation and clarity in crypto. Like, we have a freaking clarity bill out right now to allow regulators to know how to have a common understanding of how these different things are treated, so that institutions may come in with big volume. And unless we have that, we won't have formal adoption across the board. Prediction markets is exactly the same playbook, exactly the same framework of adoption as we've seen with crypto. They're just a couple of years behind. And so the same way as people got rug pulled with shit coins, people are going to get rug pulled with prediction markets, because there's going to be manipulation, and it's going to be very hard to police until you have actual regulation in place.
Yeah, it's definitely needed. And you mentioned the Clarity Act. Let's actually pivot there next, because we have a lot of ramifications for BM&R, and I'm going to do a separate video too on this. I need to check a couple of things too, but BM&R, SoFi, and Figure are impacted, as well as Circle. Did you get a chance to see that post and what happened with Circle specifically?
Yes.
Okay. So, yeah, let me pull up. Actually, here, I'll just do this. All right, I'll share this here. We'll just use a simple little thing here. All right, so Circle, for those that are not familiar with this, is a large publicly traded cryptocurrency company that they get 90 something percent of their revenue from USDC, which it's a great stable coin. It's been effective. It's used quite a bit. Now, Circle, like many other cryptocurrency companies, have benefited from being able to offer yield through a couple of loopholes that have existed in the law. What part of it was in the Genius Act? It didn't seal that. But for a long time, the United States government has actually restricted non-bank companies from offering yield on products like this. And today, it had its worst day ever. And so, like, I'm not laughing if you're a Circle shareholder or anything, but man, it really got slammed down 20% today. The reason why is I believe it was late last night, and I just saw it today. I missed it when it came out. There was news, or there was a release of what's been happening as far as the Clarity Act. Now, a lot of people have been saying Clarity Act is going to pass, that it's just a matter of time. And what I found was really interesting when I went to the Robinhood's recent event, I asked a bunch of people, like analysts, people that work at Robinhood, other traders and investors as well. And there is no consensus related to this thing. And so I'm like, I don't know if it's going to pass, what it'll look like. But there was a compromise. And this was talked about several weeks ago. So banks are arguing and saying, nope, you got to stop these stable coins from ever offering any kind of yield. It's going to destroy the banking system, which is the dumbest argument ever. But banks are greedy. They like to protect their territory. It's not going to cause the death of the United States, as Jamie Dimon almost argues. Not quite, but it's kind of ridiculous. So this compromise basically is saying you cannot offer yield, and there's no loopholes at all. There's a couple of companies that are accepted, not in the bill specifically, but the way that they do their stable coin. And so this kind of seals a hole, or seals a loophole that, for instance, PayPal has been benefiting from with their PayUSD stablecoin, where Paxos is actually the issuer of the stablecoin, and PayPal is then able to offer yield because they're not actually the issuer. Which, I mean, like, that does feel like a gray area. Circle also would be hit by this, USDT as well. And so this is called the Tillis-Alsobrooks compromise. You can only now potentially get yield on most stable coins by actually using them. So it's kind of like a cashback feature that would be potentially built into some stablecoins. So this is the death of Circle. It's not PayUSD, PayPal's coin, like ending and dying. But it does have an impact on what's going to happen potentially with the stablecoin economy. And the reason why that's so important is, let me start like first with BMNR and then just share two other pieces of stablecoin. So this is the entire stablecoin market on DeFi Llama. And yeah, I probably needed to go in. You can see $315 billion in stablecoin, and it is actually right next to an all-time high. Ethereum specifically has 164 billion. You can see it was a nice recovery. Things don't go move up in a straight line. And so over half of the stable coins actually are operating on the Ethereum chain specifically, which this has been a growth driver of a lot of what's been happening on Ethereum. And so there's ramifications for BMNR as well on a couple of different aspects. Now, on the other side of this, you have SoFi stablecoin, so SoFi USD, and you also have Figure stablecoin, which is yields. These two are sufficiently differentiated, so they're not like the other stablecoins. There may be something that SoFi has to do or change. That's one of the things I need to double check in the video. But they do not back their stablecoin by 3-month treasuries, which is where most of the other stablecoins are actually backed at. But instead, they actually have direct access to the Federal Reserve account, so they can offer yield as a bank directly. They're not impacted because they are a bank. And so and I hope this bill doesn't pass this way. It's bearish BMNR. I think it's the wrong approach anyway. It's just giving the banks what they want. If it does so, this is beneficial of SoFi and potentially hugely beneficial because suddenly their stablecoin becomes one of very few that is actually able to offer a yield, not just based on use cases and rewards. And because of their Galileo platform, their tech platform as well, there's a lot of people that might be interested in using SoFi's product there. That's really good for them. again, I hope it doesn't pass. It's a great product either way. But the other side of this too is Figure, which is a sister company of SoFi. The same man founded both of these. And Figure, they have the only SEC registered stablecoin. It's YLDS. And the way that they back this is not by 3-month treasuries, but instead it's backed by real world assets that they do a lot of lending. They also have a loan platform as well. And that yield that yields, pun not intended, receives is based on that from the loans that are actually on chain. So it's differentiated. They're able, because it's actually a security registered with the SEC, able to offer yield directly. And that has been differentiated from simply what the 3-month treasury yield is giving for these that are holding the stable coins and then pushing as far as yield to their customers. So thoughts on the Clarity Act passing, on implications for some of the companies that we hold in common? I'd love to hear your opinion.
Yeah, I mean, I understand why this could potentially be positive for SoFi. I just don't hold very much weight in this iteration actually passing of the bill. Like, I think that the final bill is going to be marked up. It's going to be somewhat softened, and you're going to find a middle ground that doesn't, play to the banks as much as this does. But I do think that, this is something where even in the final version of the bill, it's not going to be this bad. But I think you have to brace for an alternative that banks actually come to the table with and are okay. It's like a okay pill for them to swallow, right? So, yeah, I mean, good for. I think it's going to end up being good, showing through in SoFi's competitive advantage for their stablecoin. I don't necessarily think this is bad for BMNR. Like, I understand the case of it being like, oh, well, less stablecoin adoption equals bad for Ethereum equals bad for BMNR. But I think regulatory clarity on stablecoins in general is going to lead to so many more institutions piling in. So I think like it's a binary event for BMNR, not necessarily that you have to look at the nuances with regards to the actual stablecoin rewards.
Okay, I need to answer a off-topic question. This is Costco's new energy drinks. I don't know if they probably don't have them in Canada yet. I think they just came out this week, and this is just the second one that I've had. So pretty good. Tastes like a bit like pineapple and mango. I guess there's some star fruit in there. I don't remember what it tastes like. It's been a while, but yeah, very inexpensive. 200 milligrams of caffeine, and they say on the back, if you drink more than 2, you will die. I mean, not exactly, but so I haven't tried the orange one yet. Peach was okay. This is actually the better of the two. It tastes pretty clean, like closer probably to a Celsius or maybe a Ghost. Really, I didn't know that. That's interesting. Yeah, I mean, it's good.
I think he's joking.
Okay, yeah. I mean, the market does stupid things all the time. So, yeah, Costco's going to infinity, Celsius to 0. I get not really, but I saw. Let's go back just a little bit on SoFi specifically, and a couple of questions that I see. So TD said,
we haven't talked about SMCI yet. We're gonna get there eventually. So just stick around. Who do you want to bring up?
So, well, I guess we don't need to bring a comment. I see some people saying that Chris Patel is shorting SoFi. I don't think that's the case. Like, I just double checked on X to see if he posted something recently. Chris is doing what many creators do, and I'm not faulting him for this. Basically, he's like, hey, there's a lot of people that'll post both sides of this quite a bit and get pushback, which means there's a lot of clicks, there's a lot of views. I mean, it is what it is. I don't think he has a position. I don't think he's interested. I'm not sure that he even finds the Muddy Waters argument very credible. But yeah, we actually had a report or a update from Mizuho, one of several analysts that have come out basically and said, yeah, Muddy Waters is completely wrong. I've heard that even bears on SoFi have taken a look and they're like, what in the world are they talking about? And of course, we're in a silent period right now, which is sadly why SoFi has not responded. Which I don't think they need to respond like directly to it, but clarifying a few things, which the Mizuho note actually did a very good job of, would be helpful. But yeah, I don't think Chris is actually shorting this. He's just as Bab Tomori says, Chris is engagement farming. It happens.
Yeah, I mean, I don't think like so. I'll say one good thing and one bad thing. Okay, I think Chris is sort of like a mercenary where he'll go in and he'll go out, and he's more of a trader in that perspective, and that served him very well because he's been very successful in doing that. I mean, he's been in and out of many different names, all the while we've been holding some names for years now. Um, so take it with a grain of salt. I mean, SoFi is just the flavor of the month, and then next month he'll be on to another thing to highlight or critique or talk about. Now, what I will say about Chris's takes on Muddy Waters is that whether you believe them or whether you don't believe them, I think they have a place in this world because they help us to not be in an echo chamber. I mean, the Muddy Waters
Mhm.
thing came out, and I got a ton of messages of being like, "Oh, well, you're just a blind supporter of SoFi. No matter what, they can do no wrong, and this Muddy Waters claim is legitimate, and this and that." And it's just like, is that really the type of content that I'm pushing out? And I think you like as a content creator, you have somewhat of a responsibility to look inward to try your best to be authentic with the takes that you give and to try to be grounded so that you can avoid that. And I think Chris does that very well. And like I saw
Mhm.
Chris's posts and my gut reaction was like, what the hell? But then when I stopped, I sat with that emotion. I'm like, why did you have an emotional reaction to that one, Tev? Like, let's dig a little bit deeper into that. And so I think the fact that I had an emotional reaction um, just gave me the suggestion that like, hey, maybe I am a little bit biased here. So I'm not saying anything about his arguments, how much weight they have, or how accurate or inaccurate they are, but the methodology and the fact that he did say something, I think opens a dialogue, which is very important in any event that happens.
Yeah, and I'll say on Chris, like I met him in person. I consider him a friend. He's a really good guy. If I had to trim down to only follow 20 accounts on X, Chris would be one of them. The reason why is exactly what you said, Tevis. It's so easy to be in an echo chamber and have groupthink and have people that think exactly like I do. There is some value to that because people catch and see things from a little bit different angle than I've seen. But what's even more valuable is the contrarian, where they can push against your thesis, helping you to actually dig into and say, okay, is what they're saying actually right? And if so, like I want to know that. If I'm holding like with Robinhood and I'm overlooking because I'm like, oh man, Vlad is awesome, he's the best, but I'm overlooking some incredible like fatal flaw. I want to know that as an investor, and I'm better off for it breaking out of the echo chamber. The other thing that I'll say, as far as Chris, like yeah, he's probably engagement farming for sure. But as far as this argument, like it is kind of what it is. It feels like it's been down. Like he actually went on. I don't know if you saw the CNBC appearance that the Muddy Waters guy had.
Oh
Uh,
yeah, I thought you said
yeah,
Chris
yeah.
went on. I was like, what now? No, I saw.
Not Chris. You know, that would be awesome. But no, and they were not really buying the short thesis. There's like most people that are in the know that have looked at this, they're just like, this is just classic short sellers doing short selling stuff. But the reason why CNBC had him on, same thing. It's engagement farming. It's a very popular retail name. It gets a lot of clicks. It gets a lot of interest. And maybe they want to hear this guy's arguments or push back against it. But that's the way that things operate. So, but like the funniest thing too, like you had said that you got pushback of like, oh, you interviewed Noto and you've never said anything negative but SoFi, which is just wrong. Like you're an honest guy. Tanner likewise. I even got that, and I mean, what like 8 or 9 months ago, SoFi shareholders, a lot of them, when we were doing our SoFi Weekly, were saying Roy must have sold all his position. He clearly has puts. He's shorting it. He's a SoFi bear. And it's just like, because I, like you guys, speak my mind. And if I say something, if I see something is off and I don't like it, I'm not in lockstep with any management or leadership. Like even Robinhood. I love Robinhood. I think it's a great company. Love Vlad. Predictions market should be in a separate app. Old argument, done with that. But yeah, when people are like, you have blinders on with SoFi, I'm like, have you been following me? Because that's not what I've heard before. So anyway, moving on. Next up, you want to hit SMCI right quick? Maybe get into some OpenAI stuff as well.
Yeah, at some point we have to talk about macro too, because the market is up after hours and there's macro reasons why. But yeah, let's jump into SMCI and we'll go from there.
Ooh, yeah. Well, I have one other thing that I need to share related to SMCI, and it'll take me just a minute to find it rather than go through Fiscal AI. And well, actually, I might have it immediately there. So this happened, of course, last week, March 19th. SMCI has been one of those names that it's weird because they're incredibly well positioned in what's happening with AI, and they've benefited immensely from it. But they've always, for a long time, it's not just since this AI thing, there's been some sketchy things that they've done. So here recently, the co-founder was charged with smuggling NVIDIA chips, and this is not a small amount. $2.5 billion, 510 million shipped in a single month window as well to China to try to skirt or circumvent what's happening as far as the United States prohibition of shipping some of these out as well. So SMCI is down even more. The multiples are really compressed. Previously there were some accounting irregularities. There's other things that are going back like up to 10 years there. And so I've stayed away from SMCI. The valuation is insane. If it wasn't for this overhang, I might be interested. But this to me, Tevis, like my takeaway, not so much focus on SMCI. Like I'm just like going to be on the sidelines watching it. And if you guys are in it, hope you make some money. I just, when there's so many signals that like things are sketchy there, I just can't invest no matter what the multiple and valuation looks like. You can't trust it. But this showcases NVIDIA chip demand. We keep hearing from a lot of people, oh, there's all these hyperscalers that are creating their own chip, and it's true, and they will see demand for it, including eating their own dog food and using their own chip for their own purposes. But at this, and also we're hearing, oh, China has great chips, and Huawei is building some great things, and yeah, there will be some use from that as well. There's just one NVIDIA. This isn't AMD chips. This isn't TPUs from Google or anything like that. There's not a need to do that. Why? NVIDIA has the best, and it's trading at a stupid, silly multiple. I think it's a lot more compelling than SMCI. So this actually took me by surprise just how egregious this seems. And there are some people that are saying, hey, Jensen must be involved. This is bad for NVIDIA. I have the opposite take, so I'd love to hear yours.
I don't know that Jensen would be involved. I think it would be a much bigger thing if Jensen was involved. People love to make conspiracy theories, man, but Jensen and the administration are fairly close. I know Jensen has been consulted on several things with regards to the administration. I mean, this is something that bridges the gap between a sector in the market and actual geopolitics with regards to the policy around China and their speed of development. So yeah, I think if we put aside the SMCI specific news, it does highlight the dominance of NVIDIA and the complete dependence that the market has on NVIDIA to keep this AI train running. Which, I mean, I don't know if you saw Jensen on Lex's podcast, but
I didn't.
It's just yeah, it's a lot of what we've been saying for a while. NVIDIA is an absolute staple in this next wave of growth. If we do believe that AI is as big as it in fact is, or the potential is as big as it is, but it's not being treated like that by the market. And in fact, NVIDIA if they have good news, it's going to get discounted by the market, and the market's going to say, well, we'll wait and see, or there's execution risk, or this and that. And then if you had bad news, like SMCI, which is one of their biggest customers, is now all of a sudden, charged with this fraud, and people are going to say, well, that's going to negatively impact Nvidia too. It's like you can never win. But at the end of the day, the numbers are the numbers, and Nvidia is going to keep growing with or without SMCI because the demand is very real. If SMCI, who's one of their biggest buyers, all of a sudden, drops dead, let's say, there's going to be others in that queue to step in and fill that void. Their
Yeah.
product is not going to go unsold.
Yeah. And the one thing that I want to add on there too is the numbers are the numbers for NVIDIA, not necessarily for SMCI. When you have allegations of accounting fraud, and I know some of that's been cleared up, so it's hard to know whether or not to trust this. Now, throw this up real quick. This was a screener that I did on Fiscal AI. Link in the description. Save yourself. No, I'm just kind of playing. But like seriously, if you guys want to check it out, it is free for 2 weeks. It saves you 15% if you do subscribe. Revenue forward CAGR of 25% or more. So I wanted companies that are growing fairly quickly, not a tiny market cap, so $10 billion, but it's not massively, and at least positive forward PE, but under 10. There are, based in the United States, only 7 that actually fit here. And so some of these are, not tech companies. You have a REIT here. I don't know anything about them. You have Pinnacle, which is a bank that's interesting. Again, I don't really follow them. These guys I've never even heard of. Core Mining, Metals and Mining. And then you have 3 tech names. And the 3 tech names are kind of the usual suspects. You have SMCI right here, which their 2-year forward revenue CAGR as far as expectations is 51.4%, which is quite robust. You have, let me see if I can blow that up a little bit. You have a forward PE, this is just for the next year, of 8.7, which is insane for 51% revenue growth, but there's a reason for it. It's this overhang of them doing some sketchy things, and people are saying, yeah, I'm not sure if we're going to buy it. There's always buyers, but if they keep having things like this happen, this multiple, if anything, is probably going to go just one direction, even if they're growing. Now, the other 2 are, of course, SanDisk, what's happening and what they're doing. And their stock performance as well this year is insane. 91% 2-year compound annual growth rate, which is also insane. Now, if you look a little bit further out, they don't drop like right off a cliff as far as revenue expectations. Micron does a little bit more. But yeah, forward price to earnings is only 8.9, which for almost 100% revenue growth over the next 2 years expected, it seems kind of low to me. The PEG ratio, we're not even going to look at that because it's laughable. And then we have the stock that I ended up buying, not a lot of shares, but I bought some shares, had to sell some things as well to do this. They reported earnings. Micron, I've been looking at them off and on since October, ever since the CEO of Air Test Systems was basically like, hey, buy Micron. Didn't quite say that, but I'm like, man, I wish I had listened more. I thought about it. I even posted a little bit about it. Didn't do anything. Well, they came out with a ridiculous beat on earnings. They are cyclical. They've always been cyclical. Right now, it's hyper cyclical. I don't think that revenue is going to crash off a cliff, but I'm not saying that they deserve to be trading at a 50x forward PE or 40 or even 30, but single digits. Like, what are we doing? For 109.1% revenue growth rate. And real quick, actually, let's look at estimates. So this is what analysts, not what they're guiding for, but what analysts are looking at. This is part of the reason why. So revenue is, of course, ramping, but we can see here in 2028, they're expecting it to contract some. So even if you include this, like they're still growing ridiculously. Revenue is not going to just retrace at 2024, 2025 levels. So pretty incredible company. This for me is in the swing bucket of names, and so it's not a huge amount. I will take profits. I don't know that I want to hold this long term. There's a lot of deals, but yeah. Austin Finds Alpha says in this case, ridiculous speed is somehow an understatement. It is. Like Brad Freeman was posting, and he usually is like beat. He's like, no, I'm gonna just say crush. And once in a while, he'll do that for like a single number here or there for certain companies. NVIDIA, there's a few of those, and Palantir as well. Micron's, man, it was just ridiculous. So I'm kind of curious, like, Is there something else that is causing this, and also SanDisk, I guess, as well, to trade at like they're up, especially SanDisk is up immensely. When do you think, or do you think that we'll actually see the multiple actually expand? And what do you think will be the catalyst for that?
Um, yeah, I'm not sure too much around Micron. I would immediately like gut would say there's some level of like cyclicality in terms of the demand and also the prices. Um, I mean, the first thing that I would look at is if there's going to be like some type of like supply glut, if they ramp up production or as they ramp up production. And then didn't Micron also announce like 20 billion worth of capex recently? I know the market has been beating down every company as they
Yeah,
announce more and more capex. Like that's a bad thing. Um, so
yeah,
I think like this lumpy performance can cause complete outperformance, but it could also cause like troughs. And I'm not sure uh, if that's what the market is not liking or if it's just mispriced because there's an opportunity there. And so I think for me to conclude that like okay, I'm seeing something that the market isn't, I would have to sort of check off all of these items in the checklist because generally speaking, it's selling off for or it's selling so cheaply for a reason, right? And so those are the main things that I would start to look at for Micron specifically. But at the same time, I mean, I don't know, man. There's many names in the space that are trading cheaply relative to the actual numbers that they're putting up. And there seems to be something systemic about the market being in this phase where like you had these massive run-ups and now it seems like there's a lull for the actual earnings that are catching up. And I'm sure that there's going to be another wave of massive run-ups probably towards the end of the year or maybe early next year, once the geopolitics fades. But like we saw earlier, when was it, last month? Like Nvidia is trading like cheaper than Crux is for in many ways. So um,
yeah,
so just to summarize, I think there's two components, right? There's the Micron specific component, which is like, okay, what's that cyclicality look like? What's the supply? What's the capex? So on and so forth. And could those be reasons, or to what degree are those reasons that the stock is not trading at a higher premium? And then the second piece is like, okay, well, what is the macro? Is AI the trade right now, or is the money largely moving away from AI? And I think we're seeing a lot of that as well with how cheaply Nvidia trades relative to what they're putting up. And I think you're having a convergence of both the micro and the macro pieces uh, together as pertains to Micron and also other AI names.
yeah. Yeah, it'll take time. This is breaking news. Palantir and Anduril. This is Evan. He's reliable, so I've not even checked the source on this, but he's always very careful. So good follow. Good guy as well. Palantir and Anduril are part of the group developing software to run President Trump's planned Golden Dome anti-missile shield that came out just a few minutes ago. So 3 minutes ago. Um, I'm kind of curious if Rocket Lab or how big a piece Rocket Lab will be in there. I don't own Rocket Lab. Anduril obviously is private. But yeah, Palantir, man. This is a company like there's been overhang over software, and there was an analyst note that actually came out today that basically said, "Yeah, we've given up." Thank you, Austin. Yeah, double check the source as always, but yeah, Evan's reliable. There was an answer note that came out that basically said, yeah, we don't expect that Palantir will suffer like any other software name. They have a way deeper moat than anything out there. They're just ridiculous. We've seen a lot of analysts actually raise expectations as well. The company itself is growing 70% revenue year over year because of things like this. They also announced it was late last week that Maven, the Maven smart system that Palantir helped develop, that a couple years ago bears are like, yeah, Palantir's replaceable. They're ontological layer, no big deal. Now they're actually saying the opposite. And in fact, it's been adopted as a system of record, which basically means a lot of the friction that happens in government contracts, which take a long time, and you have to put in your procurement orders. There's a lot of checks and balances. Instead, they're basically like, yeah, it's the system of record. It's something that we're using and implementing all across the DoD, and so any military branch that's like, hey, we need to use more of this. It's use based, not seat based, unlike a lot of the software companies that are out there. It's going to see a lot of growth. We've seen 1 billion plus contracts. There's an asterisk on one of those because it's a consolidation of a number of contracts, but like ridiculous growth that's happening here. We're seeing on the commercial side as well. Like they just had AIPCon 9. One of the things that was really interesting that we've talked a little bit about, Steve, this is something that's older, back in 2024. And we played this clip before where this person from Applied Materials, I think it's their COO, ended up saying, hey, ERP is dead. We're using Palantir to replace it. We got another read on this from not just any small, well, they're not, Applied Materials is not a small company, but SAP is huge. And this is from their COO. They said one Fortune 500 company ran a discovery sprint, validated the plan, and executed it under 4 months. Another was able to move from actually doing about 5 migrations every 2 weeks to doing dozens and dozens and dozens in a week or less. We're excited for what's next. For us, it's very clear. For SAP, the destination is in the cloud with AI for all of you. So, like from Palantir's standpoint, they don't really care whether it is as Applied Materials said or as I can't remember the name of the coffee company. I wrote an article on this. West something. It's a smaller company that's basically using Palantir to not just make their entire business efficient. They're like, hey, we can replace all of our ERP as well. It's not going to happen overnight. ERP companies are not dead in the water. There's always going to be a place for them, but they don't really care if they're going to replace ERP or if they partner with SAP and they help as far as a switching cost, mitigating that. Because the actual switching cost, at least per SAP, is about 10 times the cost of software. It's been a big reason why you've not seen as many people switch around. It's like it costs so much in terms of time, in terms of money, in terms of trying to relearn an entire new system. It's not easy to do. So like we've seen a lot of reads as well with what was happening at AIPCon 9 and other contracts as well over the last 2 months from like Southeast Asia, where that net dollar retention, which is already ridiculous for Palantir, it's increasing even more. So, expectations as far as guidance is looking, I believe it's 60-something% revenue growth, which is a large amount. I hear from people all the time, it's like, oh, they don't make that much money. It's mostly from net interest. It's like, you've not kept up with Palantir in the past few years, and it shows. This is a company that's generating close to $5 billion on the year. I think when they report, the trailing 12 months will be something very close to that. And so having 60% plus growth, they may even see triple digits at some point. I don't expect that for the full year, but it's insane. It is insane. And so, yeah, I'm just so many vectors. Like there's so much news. If I was just holding one stock and covering one stock, I wouldn't be able to even keep up with all of it with what Palantir has done. They've gone from some little obscure company that people didn't understand to, in a lot of spaces and sectors, indispensable. And the deepest mode that's out there. And so if people are shorting it based on valuation, I get it. It is still incredibly expensive, even if they do, which is probably not going to happen, but 100% growth over the entire year, still very expensive. Well, no, I wouldn't say very, still expensive. But man, this is not an AI wrapper. It's not a passing fad. In a time when people are looking and saying, okay, does AI actually drive ROI? You can look at Palantir as one incredibly good example. There's a lot of others as well. So when are you getting back in, man?
I don't think anytime soon. I mean,
yeah, too many opportunities.
Yeah, what are they, like 300 billion now?
Yeah, I don't know. I'm not looking at the market cap. Yeah.
Yeah, I'm not. Wish them the best though. Yeah.
Yeah, it's one of those things, like it could be holding it, and I've slowly been adding to my position. I was kind of hoping that Burry and the Bears would be right. Palantir would dump to $40 a share. I might own just Palantir at that point, or a 90% Palantir again, because it would still not look super duper cheap there, but it is, especially if you're factoring growth in the mode. So yeah, but we're not going to get that. I'm skeptical that we ever even see double digits, but we'll see.
I mean, you definitely could.
It can happen, yeah.
Anything can happen in the market, man. Like,
Well, not
it's
anything.
just anything could pretty much happen.
Not anything. Well, the unexpected can happen. So the
Yeah.
impossible can. I mean, we're not going to see UiPath become the largest company in the world by market. Like it's like there's certain things that Nvidia is not going to zero, but can Nvidia fall to below $100 a share? Yeah. Can Palantir? For sure. Yeah.
Yeah. I mean, I don't know. Like, I've seen some pretty crazy things in the market that I thought I'd never see again, and prices that I thought would never come back, and they did. So it's just, that's what makes it exciting, though. That's what makes it interesting, is the fact that it's unpredictable. That's also what makes it freaking frustrating as hell. But Palantir falling to under $100, maybe.
Yeah. We'll see. Like I'll be happy because I'll add more aggressively at that point. So my Palantir position, it's not small, but it's not even 10% of my portfolio. So I'd love to get it north of 10%.
It's wild.
Anyway,
Like,
let's I think maybe we'll skip CowGPT other than just saying look at Halter technology and what's happening there. There's so many AI implementations that we've not even thought about, especially when you're talking about how AI can benefit cows that are in a pasture. It's just insane. One of those related to what's happening in the space with AI, I did want to mention this for Tesla. There's been a bit of Tesla news as well. Anything can happen. Meta went to 88 in 2022. That wasn't as crazy though. Like if you look at the price to earnings, it's kind of
100.
Yeah. Like it was wrong. It was offsides and everything. But if you look at like what they were actually spending, that Zuck was just doubling and tripling down in the metaverse, which had no ROI really. And in a time when there was a bear market, like it was silly, it was wrong, it was way overdone. But I mean, I would argue that Micron and SanDisk being priced where they're at is even sillier, despite the incredible gains in both of those stocks over the last 6 months.
Yeah.
Nvidia's not quite at that level of silly, but if we see Nvidia, like nothing else has changed in the macro, nothing has changed with them, and it's trading like under $100, that would be sillier at that point. I don't know that's going to happen, but so Tesla had some news related to what's happening with AI in their fab unit, and so I don't know if you saw this clip. It's about 2 minutes, but I think it's worth watching.
We either build the terafab or we don't have the chips.
That's really loud.
And we need the chips, so we're going to build the terafab. And we're starting off with an advanced technology fab here in Austin. And I believe Governor Abbott is in the audience. I'd like to thank Governor Abbott and the state of Texas for their support. All right. So in the advanced technology fab, we will have all of the equipment necessary to make a chip of any kind, logic or memory, and we will also have all of the equipment necessary to make the lithography masks. So in a single building, we can create a lithography mask, make the chip, test the chip, make another mask, and have an incredibly fast recursive loop for improving the chip design. To the best of my knowledge, this doesn't exist anywhere in the world, where you've got everything necessary to build logic, memory, and do packaging, and test it, and then do the masks, improve the masks, and just keep looping it. So, and we're not just going to do conventional compute in this. I think there's some very interesting new physics that is potentially, that actually I'm confident will work. It's just a question of when. So this is we're really going to push the limit of physics in compute. And we're going to try a bunch of wild and crazy things, which you can do if you've got that fast iteration loop. That I can't emphasize enough the importance of being able to make a chip, test it, and then change the design, do another one, and have that in a single building. I think that our recursive improvement with that situation is probably an order of magnitude better than anything else in the world.
And the most interesting part of that, of course, they have SpaceX on there and also Tesla, but he said, like, if we don't do this, we don't have chips. And we've seen this before with Tesla, but as recently as COVID, when there's a lot of supply chain issues and shortages, that they're like, okay, we've tried for the longest time to get what we need. We're just going to have to do our own lithium mining. And they just continue to be incredibly vertically integrated because of things like this. Now, what's interesting is also the production amount that they're talking about. Now, I don't trust the Elon timelines itself, but like this is a clear showcase of demand. Also very bullish for air test systems. Like the more startups or companies that you see that are getting in the space and doing designs, the more complexity as well, the more those boutique players that are in the automated testing equipment market really benefit. So you own a lot more Tesla than I do. My share, my percent is below 100%. What's that?
I'm out of Tesla, dude. I don't know Tesla.
Oh, you're out of Tesla completely? I didn't know that.
I've been out of Tesla since December.
I thought you trimmed it. I didn't think you sold all of it.
No, I'm out of Tesla right now. I should get back in. I think on this Terafab. I think like the exciting part for me to get back in Tesla is the merger potential. But no, like in my December portfolio update, I sold out of Tesla, and yeah, I don't have it right now.
Right. Well, interesting. What
you own more Tesla than I do, sir?
Barely. Yeah, I do not have 100 shares, and I'm not even close to 100 shares. It is a minuscule amount. It's basically a placeholder. Mostly there just to keep my attention on Tesla, so that like if it keeps falling, and it gets to like it's never going to trade at a reasonable valuation, but like if it gets in the 200s, I'm going to have to look at expanding that and growing that, because I mean, like, there's issues with Tesla. It's not perfect, but I would like to own more. I just don't want to own more at this price. So
yeah, I mean, I think like when I got out, it was around 420, 430, something like that. And it's just been chilling. It hasn't been really doing anything. At 380 right now, I could definitely get back. I went out because like I needed the money for other stuff. Bought a lot of Nebius in 70s and 80s. So I could just also trim some Nebius and buy some more Tesla. Like that's not a big deal. But yeah, I mean, and like
you've outperformed.
Yeah. But when I sold Tesla, it was like the lowest batch of Tesla that I'd held in like 5 years. I was owning a lot of Tesla at one point. At one point, Tesla was like over 50% of my portfolio, but it went down to 30, it went down to 20, it went down to 8, and then 3, and then out. So we'll see. I don't think I'll ever build Tesla back to be that big, but definitely not against getting back in.
Yeah. I do see a donation, and I want to answer the question as well. It's on Palantir. Thank you for the donation, by the way. It says, Roy, Palantir has had a few negative headlines lately. A canceled hospital contract in New York after protest pressure and insider selling. Insider selling is always going to be a thing. It's not with any SaaS company that has high stock-based compensation. It's expected. Like, if you don't like it, don't invest in SaaS. Don't, or at least American SaaS. But that's not bearish. But the hospital thing, I actually hadn't seen that until now. I pulled it up after the donation. It actually came out just today. So let me pull this up. This is, I mean, it's not great. It's one of the reasons why, by the way, international, especially European adoption has lagged. If you look at the one weak spot in Palantir, other than like too much cash, which is not a real problem, it's international growth. And a lot of it is public pressure and outrage and a fundamental misunderstanding of Palantir. So like one of the headlines was Palantir will no longer profit off of like New York people's data. And it's like, Palantir doesn't own the data. Like they don't have their own cloud. Literally a customer's data stays the customer's data. They're not doing anything with it. They're not owning it. They're not taking it. They're not borrowing it. They're not selling it. They're not adding to the data. They don't collect it. Like they're a platform like Windows, but for an entire operating system. So anyway, there was a lot of protests and outrage. We've seen some of this here and there. And a lot of it has been related to Trump and ICE and everything. So they announced not that they're canceling the contract, but they won't renew. And we'll actually have to see what that migration looks like, but it expires in October 2026. The thing is, like, Palantir delivers outcomes, and it's just silly. Palantir shouldn't be anywhere near that. It just, people don't understand, whatever. But this person caved to political pressure. It won't be the last of this. What we have seen in the past is sometimes when this happens, that they realize usually pretty quickly, like, there's no one-for-one replacement of Palantir, and even trying to piecemeal a number of providers to do what Palantir was able to do for them. And I don't know, like, this individual hospital. I've not looked into it, so I don't know how widespread that they're using Palantir, but there's not really a direct replacement. And so oftentimes we've seen companies more quietly take a step back and actually adopt Palantir. But yeah, like it's not super bearish. Like, it's not good. It is bearish, but yeah.
Cool. Shall we? Is there any other topics that we have to talk about, Roy?
You had mentioned OpenAI. I don't know if you want to talk about that, Microsoft, or anything. I'm good to move on to Q&A if you'd like. It's up to you, though.
Yeah, I think let's move on to Q&A. I mean, Microsoft trading below 200-day moving average. OpenAI just raised more money at a $730 billion market cap, and that's basically the news. Yeah, I don't know that there's anything else that we wanted to chat about, but let's go into Q&A and let's see if it comes up. Alexander says Microsoft is Google from last year. I don't disagree. Oh, did you see that Apple news today, Roy?
I did, yeah.
Interesting? Not interesting?
Nah.
They're my favorite sock retailer.
So the one thing I will say, and maybe we should just bring up that just so people can actually see. Let me pull up here. That's the Microsoft one. Here's the Microsoft NVIDIA OpenAI deal, the venture raise.
Oh yeah, the Disney is reportedly exiting the deal it signed with OpenAI like 3 months ago.
Yeah, I haven't seen that, but that's really interesting. So here's Apple's, and they actually released a couple of things that are more innovative than that big sock that you can use to hold your iPhone recently, which, I mean, like, that's a good thing for Apple. They announced a new all-in-one platform that includes key service companies needed to effortlessly manage devices, reach more customers, equip team members with essential apps and tools, and get support for experts to run and grow efficiently and securely. It's interesting. Like, it's not a bad thing. I don't use Apple products at all anymore. I'm sure this will get some use. Apple tends to release pretty good stuff. They have had some flops, but usually it's when they're doing something that's so far out of their core competency that they can no longer innovate in that direction. But yeah, this should be decent. I don't know. Like, out of all the Mag 7, there is no company that I'd want to own less than Apple. So it's hard for me to get excited with Apple when you have NVIDIA trading where it's at, when you have Tesla doing some really incredible things at stupid valuations, yes. When you have the Microns of the world trading at, like under 10 forward price to earnings. Yeah.
It's all relative, though. I mean, I think with macro, like with AI, it makes the entire landscape more dynamic, and it makes everybody have a higher probability to release something groundbreaking. And then you layer in valuations on top of that. Like, who was it? That user that said, hey, Disney or Microsoft today is Google a couple years ago. And it's like, it's true, man. Like, there comes a point where every one of them like I've said this before, like, the sort of like Tevis's idiot investing technique. It's like the caveman investing. At any given point in time, sell the beloved part of the Mag 7 by the hated part of the Mag 7, because every single year that rotation will change. Something that Apple's going to do, mark my words, something that Apple's going to release is going to take them to new all-time highs, and they're going to be the darling, and everybody's going to be like, oh my God, why don't I invest in Apple? If Apple were to turn around tomorrow and release news that they're buying Perplexity, as an example, all of a sudden, everybody would be like, Apple is back, baby. I'm buying Apple, so on and so forth. Same goes for Microsoft. Same goes for Meta. Same goes for Amazon, that are now the unwanted Mag 7 companies. Any one of them can release anything on any given day that can put them on the top of the social preference hierarchy. And that's just what it is.
Yeah, I love that. I don't think that's bad. Like Microsoft, I wouldn't want to own it, especially like, so if it was the only thing that fell, and this is going to be the answer to a lot of the questions that I see that are in the queue. If it was the only thing that had fallen and everything else had held up pretty well, I might be interested in a swing, kind of like I'm doing with Micron. That's not the reality. Like, it's fallen in the midst of ridiculous screaming buys in the market. And it's hard. Like, that's one of the SoFi's problems. Like, it's trading at, I think, well below fair valuations. It's very undervalued here. That can persist for a while, but there's so many good deals. I can't just buy SoFi.
Can I ask you one question?
Yeah.
First of all, let's talk about this. Microsoft NVIDIA news today is good for nuclear stock. I have no idea what the news is.
Okay. Well, we did exchange that. Let me pull up the actual, just so I don't get something wrong here. Okay, here it is. You actually sent it to me. So what are you doing? You're sending me articles and you've not read them? No, I'm just kidding. So OpenAI, Microsoft, NVIDIA near a $10 billion venture raise. I'm not sure if this is,
good
what
for
he's referring to, but pardon?
How is this good for nuclear stocks?
Energy demand. So, and there's also been legislation that's basically passed it. These guys have to start looking at and developing their own energy, or at least doing this in partnership, not just tapping into the local grid, which frankly is happening less and less. And that's actually a good thing. That's actually one of the cool things. If AI ends up, which I don't think, just a bubble and a passing fad, if there's a whole lot more energy infrastructure that's built out, like, we've lagged significantly in the United States versus where we should be. And so if this is what actually causes us to get back up to speed for energy, that's great for America. That's great for individual people. But so this was an interesting valuation add. Of course, NVIDIA is flush and cash. Microsoft has plenty as well. And OpenAI needs all the amount that they can get. The valuation is just, it's kind of silly, but thank you for that donation too.
Yeah, thank you for the donation. The question that I was going to ask is, what would have to change, if anything, in your mind to make Micron part of your portfolio permanently, as opposed to trade? Because like Robinhood started off as like a kind of like a trade, and now you're wearing their T-shirt.
I have 3 T-shirts now, so there it was, not understanding that it's just simply cyclical. Like, it is cyclical. I'm not against investing in cyclical companies, but how dominant they are in the market. Where I'm actually more interested, if I was to invest in a company that is devoted to memory production, RAM, it's basically a triopoly. And one of the triopoly, SK Hynix, which is in South Korea, like 2 of them are, is actually looking at going public in the United States. This came out today, looking at raising potentially $10 billion. They're planning to do a US ADR listing, and it's right around developing CapEx. I saw a question just a few minutes ago on them doubling production. I haven't heard the doubling capacity, Kieran, but they're increasing production capacity, DRAM every month by a set interval, everything. Anyway, SK Hynix, I think it's the better of the 2, and I know these 2 a little bit better than the third in the triopoly. But like, the other thing that I have to also think about is what's happening with GPUs, TPUs, Trainium units, and all that sort of thing. Is if RAM continues to trade at such high margins and this super cycle lasts a long time, we're going to see more competitors actually get in the space. Maybe it'll break out of a triopoly. So I have to have a better understanding of that as well. I don't know the leadership team. I don't know the culture of Micron. I just have to basically know a lot more of what's happening in the space. But I guess like if they continue to perform, that drop in revenue doesn't look like it's happening. I have a better understanding of like the culture and the capability of this company as far as like the leadership. And I hear from like external folks like competition or people like Gain Erickson or Jensen Wong, where they're like, hey, buy NVIDIA stock. I mean, they're not going to say that, but essentially like what they're saying about Micron, I said NVIDIA. What they're saying about Micron is so bullish, it's hard to ignore. Maybe then, but I like a super concentrated portfolio. And it's like, the question is, why wouldn't I just buy more NVIDIA? It feels easier other than a swing. So
you could say
we'll
that
see.
for any stock, though. It's like, why can't you just buy? Like, that's Tanner's bulletproof argument. Like, oh, insert whatever stock you're trying to push here. And he's like, why shouldn't I just buy more NVIDIA? It's like, well, by that logic, NVIDIA would be your only stock.
Yeah.
You know, and it's just, it doesn't hold.
Another donation. I kind of feel bad for you, Tevis, but thank you. Distract them. Do you think VG will get back to its IPO price at $25? Yeah, I mean, obviously, like you're not putting a time frame on. I'm guessing you mean this year. If you had asked me this before the Hormuz situation, I said no, absolutely not. Like it would have taken a confluence of a lot of factors going right and positively, and we've seen that even external to the Hormuz situation. With what's happening, we should talk about the ceasefire as well. That's the one thing that we should have talked earlier on the macro. Trump initially had given basically an ultimatum. Iran is like, hey, we're not going to do that. Now there's basically a ceasefire over a month. There's a lot of external countries trying to get some sort of peace signed, from Pakistan to China to Saudi Arabia to UAE. So I'm still skeptical that this gets resolved that fast. I mean, at the same time, you're hearing like every other comment out of Trump's mouth is, nope, we're not going to give in. We're going to keep bombing them. This is going to last forever. And then the next comment is like, no, we're pretty close to an agreement. Things are good. And then I don't know. It's hard to get a read on what's actually happening there. VG on the short term, of course, benefits because the price of natural gas, and I didn't look today, so maybe today proved me wrong, actually has fallen in the United States since the start of this conflict. Natural gas is actually trading in some places at a negative, or essentially a negative valuation, and so they're just burning it off. At the same time as overseas, like TTF there in Europe, it's down a little bit over the last week, but it's up incredibly elevated. Also JKM over in Japan and Korea, the Asian market, which does compete for the spot price with the TTF, it's up substantially as well. So benefits VG, who has a lot of commissioning cargoes right now. They also have a lot of above nameplate capacity that they'll have. They benefit from that spread. Plus, they have their own ships as well. So it's I have a separate post, and I need to do another video on like basically the valuation. But all that to say, this Q&A, I need to be shorter. Sorry. It absolutely can get back to 25. I think the sweet spot, and I'm asking a couple of people that are in the field this as well. You don't want to see this conflict persist for a long time, because then the people might start to switch over from natural gas, which is not done easily, to other forms of energy and just not trust it. But you do see, like in 2022, the prices of where natural gas was, the spread, it was absolutely ridiculous. And it lasted a long time, and you didn't see people switch away. So there's been a lot of other positive changes for VG, some related to Hormuz, some not. But yeah, if I were to give you odds on $25, I would say it's 50-50 at this point. And it relates to the Hormuz situation. If things are resolved, and we do see after hours, there is indication of potentially a ceasefire happening. See, VG is now down. It's down like 2%. It's 16.28. I don't think that we'll see single-digit VG again. A lot has changed, and just because there's a ceasefire, or just because things are resolved, Qatar is really beat up. The Ras starts with an H, field is quite damaged. It's going to take more than a month to get their full production back online. 5 years plus for at least 50% of the production as well. And the market was already tight to the point where there's just not enough natural gas to even meet the demand for this year. So, yeah. I did, full disclosure, take some gains on some leaps. Over the last 2 days, I'm just like, I'm up like a 4x on those. Let me lock in some of the gains. So
You've been killing it recently.
I'm still down year to date, but it's
Are you
despite. I am, yeah. I'm down. It's because of SoFi and Robinhood were the number 1 and number 2 positions in my portfolio. Number 3 was PayPal. None of those had done well.
You know what?
Every new name that I initiated over the last 6 months has done insanely well, and they still don't quite offset. So Ross Lafon, thank you, Big Beard.
The only thing that's keeping me, like, I'm up in one of my my bigger portfolio, and then I'm down in my like 2 smaller portfolios, and I think it's entirely just due to Nebius. Everything else is just crap.
Nebius
and
has been good too for me.
Nebius is the only thing that's like keeping me up. All right. Let's thank everybody for the donations. Do you think SoFi goes up to 20-ish, pulls back again to 15, and then we go higher? I'm seeing a lot of this talk on T8 analysis. I don't know that it's going to pull back to 15, man.
It could,
but yeah, I think more likely is we just chop between 17 and 19 for a while, and then head into earnings maybe around 21, 22, and then go from there. Especially if we have like a ceasefire or a deal or something like this, then yeah, that's going to be good for SoFi. It's going to be good for everybody. So we'll see.
The wild card for SoFi earnings, and one of my recent videos, I think it's my most recent one that I published, talked about like the 3 legitimate reasons why the stock is trading down. The only one that's really material to SoFi where they're at is a private equity stuff. And they really need to give us a good read on what's happening in the space. It was too early for the market to be paying much attention to it. They did talk a bit about it at their last earnings call. As far as like what's happening with Blue Owl is a different bucket than the consumer loans, the personal loans that they're wanting. But it's all interconnected. And so like I want to get a read on what's happening with the loan platform business and better understand like SoFi is still a very good buy if there is maybe less growth in the loan platform business because of private equity. But yeah, if it's untouched, like they need to say that as well, and also address some of the short report stuff. But yeah, we could see 15. We could see going up to 20. Like I agree with Tevis. We'll probably be range bound for a while. Hey, maybe that even persists, and I hope not up through midterms.
Yeah, keep in mind they have their earnings in 4 weeks. Their earnings is at the end of April. And you're now going to get this slow stair step leading into earnings. And probably, if I was a betting man, which I absolutely am, 2 weeks from now, you're going to start an upwards trend. And so if you have the macro coinciding with this cycle that we have for SoFi running into earnings, then I could totally see it breaking above 20 in the next 4 weeks. Now you might say to me, like, okay, Tevis, like from 1670 all the way to 20, like that's a big move. It's not, man. It's totally not. So what is SoFi going to be when the earnings happens, like on earnings date? I could see it being at $22. I could totally see that easily.
Yeah. I think if we go to 15 and we're around there into earnings, I'm not even going to joke about 11. Like it's not funny at that point. Like if we're in the 30s or the mid 20s, whatever. But yeah.
Yeah, exactly. 2 weeks to flatten the curve. ESD from that one.
Boy.
Does Tevis not work anymore or on vacation? This is just a vacation. I am going to be going back to Canada eventually over the next couple of days. Probably the Friday show is going to be from Canada. And I'll be stuck there for however long it takes me to absolutely run away again, probably a couple months. And yeah, that's can't be doing this full time. Can't be a nomadic YouTuber full time, unfortunately. But one of these days, you might wake up and you might see that I've gone crazy and escaped to Southeast Asia, where I'm going to live my days. So you'll never know. Why does my trash stock Orbs pumping today? If OpenAI goes public, does their 90 million investment moon? Yes, that's exactly why. Tom Lee posted earlier today, and I'll bring that up in just a second. I don't know, Roy, did you have a chance to see this post?
No, I didn't.
Okay. So this was the post from Tom Lee. Orbs said there's two ways to own AI LLM, OpenAI, in public markets. VCX, which has a stake in Anthropic, which is kind of crazy that they have 20% of NAV, and VCX has been pumping, and 10% of OpenAI, or Orbs, who has 30% in OpenAI. 30% of their net asset value is in OpenAI. And Tom Lee said, hey, look, Orbs NAV is 30% OpenAI, and it trades at 1 times NAV. VCX has a stake in both and trades at 25 times NAV. So I think that is some indication of why it's running. Of course, VCX, the Fundrise Innovation Fund, is up 64% today. And over 6% in after hours. It's absolutely crazy how much this thing has run, Roy. But yeah, Anthropic.
Yeah, I guess it's partly based on that Microsoft and Video OpenAI thing too. But I mean, there's more companies obviously that you can get OpenAI exposure from. Microsoft, of course, has a very large stake. NVIDIA as well, and there's others. SoftBank, you know. But yeah, like as far as concentration, I think that's his argument. I wish they were more clear because, like, frankly, they've not been, and it does bother me. Like when BitMine released their update, not this Monday but the prior Monday, they mentioned that, and they're like, "Hey, we're giving Orbs some money so that they can invest in OpenAI." I'm like, why? Why not just do that yourselves if you want to? Which I wouldn't be super excited about. But yeah, it's. And then they said at the time, like, we're the only ones that you can actually invest in to get. It's like, come on.
Yeah, let me present the other case. Of course, they're not the only ones, but how big is Orbs, Roy? Orbs is about $200 million in market cap. A third of their entire market cap is just their OpenAI investment. Yeah. If they raise more money and they invest more in OpenAI, and that 1/3 becomes 1/2, they become the best proxy in the market to have a direct exposure into OpenAI, for example, and the market will trade them like that. It's crazy that they're still trading so cheaply. Like, they're literally 1/4 the size of Air, and they have $50 million, $60 million in OpenAI, something like that. Of course, Orbs is up today. If anytime OpenAI has news, Orbs is going to be up. Anytime Orbs makes a bigger investment in OpenAI, Orbs is going to be up. So yeah, and like I get this question too, like, well, what's the premium, right? Like VCX, Fundrise, it's a fund. It has multiple names, not just OpenAI, and it's going to trade at a premium as a result of that. If I had a name and it was a SPAC and it was a, whatever company, but they had 1/3 of their market cap in Anthropic, oh boy, I would invest a lot of money in there because I want to invest in Anthropic, but I can't. And so I think it's going to be the same for other people who are looking to do the same with OpenAI. And while it's not the same, how much will an OpenAI announcement move Microsoft? Probably not much. How much will it move Orbs? Probably a lot more because it's a more direct exposure.
Yeah, Austin Finds Alpha reminded me. He said paying $5 trillion for Anthropic is wild. Sam and then Amit retweeted him as well. Talked about this too. That the VCX, which is just it's mooning, applies a valuation. It's a little north of where NVIDIA is. It's just like, okay, Anthropic is amazing. I've said over the last couple of years, man, I'd love to have been able to invest in Anthropic. Mm-hmm. Here, I would not be a buyer of this. OpenAI, I've never really been that interested in. Like at some point, like in the past, I would have been interested, but I don't like Sam Altman as much. I don't like OpenAI as much. I really don't like Orbs at all. I do see the value there, but yeah, I get why it's up 20%. Like it makes sense, especially like VCX pumping. Tom Lee's comment: people want OpenAI exposure. That's one way to get it. But there is for sure a like the real bubble, Tevis, is what's happening in private equity, especially around AI names.
Yeah, I mean, it just speaks to demand, man. People have a overwhelming demand because they see the power and the potential of the actual products, and as a result, they want to have exposure to the investments. And I think it's absolutely criminal that these companies that are, the biggest movers of our generation and the biggest paradigm shift of our generation are still locked where the bankers and the hedge funds and the private equity funds are the ones who are the primary beneficiaries. It's absolutely stupid, and you know, it's not nearly as democratized as it should be. And I think that's what Vlad and others are fighting with regards to tokenization. Like, you're getting fewer and fewer companies these days go public because they don't need the funding, and you're getting more and more benefits locked up in accredited investors and people who actually are already very wealthy.
Yeah, that's something to really keep an eye on is if private credit continues to have issues. There's a lot of the private credit investments that have actually circled around SaaS, and that's been one of the biggest problems is SaaS was an incredible place for them to put money in as far as private credit and the returns, just because you have like the seat-based subscriptions. They're growing rapidly, expanding rapidly, high multiple, you perceived as a high moat. And I see a lot of questions on SaaS, which we're going to get to, and I'll be a little bit quicker from here on. If that dries up and they're looking for something else, well, so they may not have as much money, and we've seen some pushback, like for instance with CoreWeave. It's been maybe about a month ago, related to Blue Owl and that private credit that was funding them. That's been cleared up since then, but if we see that meaningfully, and I think we're already at this point, honestly, with private equity, outside of the top names, so OpenAI and Anthropic as well, and a few others, it's actually been in a bear market, and it's been hard to raise money outside of a certain space and outside of the top few names. SpaceX certainly is another one as well. So we're going to see, just even given like with SpaceX, with the terafab stuff and the capital expenditures that they need to do, we're going to see these big companies become publicly traded companies. I wouldn't be a buyer there. Maybe I'll do try to get assigned just a few shares on the entry and sell them, after 30 days. But yeah, IPOs. But that's a great thing for us as investors. If a whole bunch of these companies are like, hey, we need money, let's go into the public market. I just wouldn't be a buyer for at least 6 months and maybe a little bit longer on some of those names. So.
Yeah. Okay, we have a lot of questions.
I'll limit myself to 30-second replies.
Does Claude Pro gate users in Canada? Yes, it operates the same as in the US. Like you'll run out of tokens after a time period, and then you'll refresh afterwards. Okay, so that answers why Orbs is up. B of A initiates Nebius with a 150 price target. Yeah, very bullish for Nebius this morning. Didn't really react to the news, but every major price target is above where it's trading right now. What needs to happen for crypto to come back? In terms of macro, do we think it's happening this year? I think a couple things. Number one, we need to not have these geopolitical overhangs. And so if the conflict is resolved, that's obviously good. Because the market can go into more of a risk on nature, whereas with the conflict, it's more risk off. And then number two, I think with the Clarity Act passing from a regulatory perspective, it gives a green light that is required for massive institutions to pump some more volume into crypto specifically. So I think those two things are prerequisites for crypto climbing higher.
Yeah, Clarity Act is definitely needed. Probably not in its current form.
Can SoFi purchase back some shares as a company might stop the bleeding? It might, but I think there's better uses for their money. Go ahead, Ray.
Yeah, no, I agree. It's since they're a bank, they're actually able to lend out multiples against the money that they have, and I think that's a better way to go. Unless we get to stupid prices, if we see this is not going to happen, but if SoFi is trading at $6, yeah, buy back. buy back as much as you want at that price. I'm sure Noto will be scarfing up shares. I'll have to figure out what size I'm actually comfortable with. And so a lot of it will be swing at that point for SoFi, but I'd be buying. I mean, like it's not going to happen, but I don't think that we'll see a valuation where they're actually going to do that.
Will the act pass and opponents just take what they can from Clarity and hope for amendments later?
That's kind of what happened with the Genius Act. It's not going to happen with the Clarity.
Yeah. And I think there's going to be another version that's a little bit more towards the stablecoin side of things. Buybacks look desperate. They have a plan and they're executing on it. I agree. Wouldn't that just mean people want more ETH if you can stake it instead of stablecoins? So speaking on the demand for Ethereum, if this does pass in its current form.
I would say no. The reason, well, maybe. So a lot of the holders of stablecoins are actually international, and they hold stablecoin rather than just use it because, like, hey, inflation is a real thing, especially overseas in some countries. Having the US dollar right there able to be used is great. Plus, you're actually getting some sort of a yield, which is actually compelling. But here in the States, at least, I would say that there's a lot better no-risk returns, substantially better than what's happening from staking revenue with Ethereum. So maybe internationally, I don't understand that quite as well. There's a lot more risk there, so maybe.
I'll take the other side of that. I would say no, because people or institutions will hold stable coins as an intermediary or as like a treasury almost. Like the stablecoin reward is just a bonus, but the stablecoin being pegged essentially is essentially as like the same as holding digital cash. The problem is you don't want to stake that because the validator queue is so long that it'll make it less liquid for you to operate if and when you do need to move those funds. And so what you'll gain in rewards, you'll lose out of in speed. And if you're thinking of it like an investment, well, there's probably better investments to make. But I think stablecoins right now have some utility in terms of being like a parking space or a parking lot for your funds in the digital world. Same as like a money market fund or something like that would be in the fiat world. It's like SMCI is giving weapons to our enemy. WTF, this needs to be investigated and prison time served. It screams treason. Sure. I mean, I don't think either of us are going out on a limb to defend SMCI. We're just talking about the NVIDIA implications. Why isn't Anduril going public? Because the market wants to keep me poor. That's why.
Yeah, and I think Palmer Luckey likes to have, just to be agile as a business and make decisions internally without having to get everything approved by, shareholder meetings and everything. So, like he was, I forgot the name of it. Whatever the quest was before, it started with an O. Something Rift. Oculus Rift. It wasn't a publicly traded company, but he felt what that was like in his short time with Zuckerberg after they were acquired. I think that they will probably go public at some point. They're a hardware company. I mean, they do software as well, but I think it might be a while on that one.
It's the same reason. It's the same reason Elon kept SpaceX private for so long. He didn't need the money and he didn't need the scrutiny, and that's flat out it. Like he wanted to operate without necessarily needing to do quarterly filings and having regulators up his ass about everything. Like he just wanted to be a private company, and he didn't really get a lot of the benefits of being a public company because generally what that is liquidity. And in this case, like depending on where your business plays, what sector it's in, you have trade-offs there. And I think with Anduril, like what they're doing, there's definitely going to be trade-offs. Any thoughts on Doc N? What's Doc N again? I don't know.
I know I'll recognize it because I've looked.
You like to get every
DigitalOcean Holdings. No, I don't have any. It's down quite a bit after hours. Stock offering.
Roy is saying Micron and SanDisk are cheap.
Yes.
Most concise answer you could have given. Is Tesla coming for air market share? Say it ain't so, Derek asks.
No, they're not using automated testing equipment. Like they will use automated testing equipment from others. They're not developing their own. They're instead designing their own chip, which is bullish. Maybe for air, Tesla has been a customer in the past on the silicon carbide specifically, the inverters. But maybe they'll use air again at testing at the wafer level. Maybe it'll be the Teradynes, the Advantest, or somebody else. But yeah, they're not getting into that.
Kiernan says Micron and SanDisk are objectively cheap.
Yeah. If you want to see stupid valuation, like the stupidest one is the PEG ratio, price to earnings growth. Under a 1 is considered a screaming buy. I don't know what you call it under a 0.1, Tevis.
Yeah.
What do you call that?
I don't know. You're an idiot for not buying this. Okay, let's see. I wonder how long it'll take to build the chip factory and ramp it.
I mean, probably a few years. Two, maybe 3. It'll be interesting to see what that looks like too, Tevis. Like, are they at the point with Optimus then that you actually see, not just in the line itself, but some of the Optimus bots running around doing things?
I think the Terafab is like a hint that these companies are going to merge, and maybe that's a little bit of tinfoil hat talk, but like seeing all those 3 logos there together, like, I don't know, man. There's
What's
been
it called then?
What's that?
Does it keep the Tesla name then?
Yeah, no, I think it's going to be like a conglomerate type of thing. Like it's going to be like Berkshire owns Geico, then they own See's Candy, but like you don't see, like, they're still separate entities. They're just owned by one holding company. Similar to Google, right?
Yep.
So I think we're going to see that. I don't know, man. It'd be crazy to see that. I think we will see it. This is the thing that makes me, like, when I saw the Terafab news, I was like, oh man, Tesla's going to be up a lot on this. And it wasn't that much.
Yeah.
In my mind, I was like, I have a timer now where I need to get it back into Tesla, because once they merge, if they merge, you're just going to have SpaceX valuation on top. And Tesla already has a stake in XAI and SpaceX. Like, there's this SpaceX and XAI are the same company now. So,
I'd love to see Tesla at 250. Still expensive by multiples, but I'd buy there.
I don't
know that we'll get it. I'm skeptical, but
no. But like, think about it this way, right? Like, Tesla is 1.4 trillion in market cap. SpaceX,
Tesla, right now,
Tesla right now is 1.4 trillion in market cap. And SpaceX, they're talking about being like 1.5 trillion on IPO. And so the moment that they announce, hey, we're going to do a merger of equals, it's like, okay, cool. Now the merged entity is close to 3 trillion. You're just going to get a doubling of Tesla's stock from 400, and you wake up the next day, it's 800. I don't know that it would play out that way, but like, I'm just using, very simple arithmetic here.
I mean, like it would not, you would, well, the valuation would increase. It wouldn't be a double though.
It would be sure. But with the excitement around SpaceX, I think you would definitely get close to a double. And SpaceX is that expensive because there's a high demand for SpaceX.
Yeah,
so
because Rocket Lab's expensive, and anything is in that space has a very deep moat. And it's also private equity. Like, private equity is in a bubble.
You're saying if you double down now, then you can get 100% instead. I don't know what that is about. Guys, enjoy the hard work you put in. Why has nobody mentioned that these short theses come out at good places technically for the short thesis?
That's usually the case. They wait for opportunistic times as far as the timing of news, or in this case, SoFi's quiet period, which they do display on the website. I don't know that they waited for the day. I need to look that up and see when Muddy Waters' short report came out. But it was very close to the beginning of that silent period. So like, they're not going to be able to fight back. And then as far as TA, it was kind of a falling knife anyway. So They're not idiots. And like with Muddy Waters, like they've been wrong so often on so many, except for the Chinese stuff on their short reports. But they don't play long term, except for Apple 11 was one of those that they did get burned on. They're like, hey, we're gonna come out with a short report. We hope that the stock dips 20% and we can just sell with a massive profit in that day. I mean, they say it right there in their thesis.
Yeah, and I wonder if they timed it specifically because SoFi was going to be in a blackout period and would be limited in terms of their mobility, because it's now 1 month until earnings, and so they're either in the blackout period right now or they just started the blackout period. I don't know if that was a thought process around Muddy Waters, but it limits
Yes.
what SoFi can and can't say during that time, right? Because they have material non-public information.
And a lot of companies will respond anyway, and it's not material non-public. Like it's public. They just use the public stuff. SoFi is very conservative, too conservative, frankly, but it's gotten a little bit better on their communications. So, yeah. Muddy Waters knows that. They're not idiots. They're wrong, but.
How low does CrowdStrike need to get before either of you are interested?
Honest answer, I don't know. I am interested, like, potentially, but the one that's in the space kind of that I want to own more is Cloudflare.
I mean, Cloudflare has gone back
It won't
up.
go down.
It went down.
Every time I start to be like, oh, maybe it's going to fall where I'm comfortable adding, even though it still looks expensive. Then it just like, we're going to gain $100 over the next month. And they're like, stop it. Matthew Prince, do something stupid or silly for once and like, just take a 6-month vacation and then come back.
Yeah, seriously. Like that dude, was it Trade Desk, where he like sold all his shares at the top and then bought back all those shares at the bottom?
Jeff Green, yeah.
You could pull a Jeff Green. Yeah, but the problem here, Sebs, is not necessarily a CrowdStrike problem. It's the fact that we don't trade in a vacuum. And so it's just like, if everything was hitting all-time highs and I'm flush with cash and I don't know where to put it, and CrowdStrike is beaten up and it's like 60 or 70% off their highs, and I'm like, oh, wow, CrowdStrike is like, the market's being unfair here. But if you have Micron trading at like a 7 PE and NVIDIA is super undervalued and like everything's down, the S&P in general, and I'm like, I don't have any money left, I'm not even thinking about CrowdStrike, dude. So
yeah,
it's a tough reality. Higher upside next, Adobe or Microsoft? I would 1000% buy Microsoft over Adobe, personally speaking. Just a better, more diversified business with a deeper set of resources.
Yeah, there's more risk, but higher upside is for sure Adobe. But I would buy Microsoft over Adobe easily. Just the mode is still very deep there. Trading under the 200-day, it feels like an opportunity. There's too many opportunities.
Big Beard says Iran denies ceasefire news unless U.S. or Israel meet demands. Or are we riding a pump until Friday after hours? I think it's largely going to depend on the talks that go on Thursday. I think they're scheduled for. That's going to be the main catalyst the market looks towards. But
every 2 days it reverses, so I wouldn't be too focused. And I've just been like, with a few, it's not many VG shares. I've just been trading it back and forth. Like, oh, okay, well, it's up quite a bit. Let me sell this little bit of shares. Like it's not even $100. It's just or 100. It's for fun. It's like 70 shares or something now. But it keeps getting bigger because I'm like, I'm not a very good trader. I think I'm a very good investor long term. So I don't have too much in the swing bucket. But that's a little bit where it's just like, oh, I had 50 VG shares, and then we'll sell VG. I'll buy something else, and then VG will dump, and I'll buy back in. It's like, oh, now it's 60 shares. Now it's 70 shares. I think it's like 85 actually right now. Anyway, doesn't matter. But no, like it's going to go back and forth. It's just a roller coaster market right now, and it probably will be for the next month.
Yeah. Air, add more or take some off? Great question. It's at $39. It's actually up another 3% after hours. Just broke $40 again. But keep in mind, air last week was at $47 is where it peaked. And just earlier yesterday, it was at $32, $33 where it bottomed. So, Roy?
Yeah, like for me, I'll answer just for myself. It is, double check here. It is my number one position. Well, let me double check Robinhood after. Yeah, easily. It's actually easily my number one position. So I sold previously some, not any shares, but some covered calls to $50 strike, which for a little while there, I'm like, well, maybe 20% of my position's gone. My average is like 17. So it's a micro cap. And I don't want to be irresponsible and just say, even though I think it is going to $70 this year, I was saying that when it was in the 20s, like $20 a share. And it back then it was like people, people weren't like they didn't know the name. It feels very possible right now. So that said, I'm not going to add any. I'll actually, I even sold just one contract at $50 on Monday, so it is a lower amount. Gave me $100 or something. Just I want to take some gains along the way up to 70, enough to cover the entire cost of my position and just let the rest ride probably over the next, 3, 5, 10 years. We'll have to see how it plays out. If I didn't own the position size that I wanted, I would still wait for it to retrace. It's very volatile. You can probably, if you're patient, you maybe write cash secured puts, very good premiums there, but they are monthly contracts instead of weekly, and you are writing into earnings. If I didn't own enough, I would probably just wait for earnings. I think that there's a decent chance that the algos are going to sell it off again like it did last quarter, and it reversed like within 24 hours. It was crazy. Thankfully, I didn't wait. But yeah, the market tends to give gifts, especially in a roller coaster market. So figure out what price you're happy at and look for that price, set an alert, or write a put.
Yeah. Edward says, did you see the 4.5% APY? And yeah, we did. I got tagged in it. Maybe that's you. Are you Eddie? Because if so, yeah. SoFi Plus getting a new upgrade, 4.5% APY for members starting on March 31st, up to 20K. It's good. I don't know that it's like it's good. It's good. It's not. But again, they subsidize a lot of that with the fact that it's only for subscribers, right? So you got to keep that in mind as well.
Yeah, it's nice. They'll take some market share there. I actually encountered several people today, including Jesse Dow, who has quite a bit of money, that's looking at moving a lot more into SoFi. Several others as well. Yeah, people are tired of getting 0.00001% at Wells Fargo or Bank of America, when you can get 4.5 on, it's just up to 20,000, but still, like, that's a good chunk. 3.3 outside of that, sure. Yeah, MD33, pull up his comment there at 757. How about the shift for apples? That was up insanely today, and there wasn't any news at the time. I don't know. I don't own Shift 4. I do know it some because of Tanner and Jarek Isaacman in the payment space. But did we actually find out the reason for it? It was up 25% without any news at all at one point. And I thought it was because of this, because nothing else was really plausible. That NASA is announcing $20 billion plan to build permanent moon bases. Jarek Isaacman, who is the CEO of Shift 4, is also at the head of NASA. And so like, oh, that must mean 4 goes to the moon. I don't know. No idea. It's been undervalued, but a lot of payments names have too. So maybe there's some news there. Maybe, who knows? We'll probably find out, but it's odd.
Yeah. Sorry, I'm just making a little tweet about the SoFi thing just because Eddie wants me to make a tweet about it, so why not? Yeah, I don't follow Shift 4. I saw that they were up today. Congrats to everybody who's in the name, including Tanner. And let's move on. CNN said Iran prefers to just talk with JD and not with OF. OnlyFans or Kushner? Why is Kushner even involved when he gets money from? Okay, I don't know.
I don't know either.
Yeah, like I don't vet these questions before I throw them up on screen, guys. Don't abuse that fact.
Silver is like the precious metals. Gold has been volatile for a while, which is a little bit surprising. Silver is like insane, man. Like the moves that happen every single day. I don't know. Like I don't know. Like if you asked me like 2 days ago, why is it just cratering? I'm like, it would seem it would be going up, but there's a lot of speculation in these names. So I just say that adds to a lot of volatility both ways.
Yep. Yep. Okay. Tevis, are you not at your full-time job anymore? Yeah, I am. Well, I mean, I switched jobs and I had 2 weeks off in between different roles. So I figured I might as well come to South America for 4 weeks. And I start my new role next week. So actually, okay. So I start my new role next week and I'm going to get busy again. But Roy, me and Claude have been hard at work this week. I'm going to build a full chief of staff through Cowork and Dispatch to use all of Claude's functionality. So basically, morning updates through all of my Slack messages, all my emails, recording all my calls and building like a central repository of like, okay, here's Roy, here's Roy's role in the company, here's how it pertains to Tevis, here's all the conversations that they've had, here's all the projects that they're working on together. And every day, end of day, to do summary messages for me every week at the end of the week to summarize all the projects. It's like a full virtual assistant / chief of staff role. And I'm planning it out from a product management perspective because I'm going to have a pretty big team and a pretty big mandate. And it's actually like a legitimately like growing company, like they're tripling every year. So I need to be organized, and I want to use it as an experiment to like actually flex a little bit on the AI side of things. I'm really excited about actually like letting Claude loose on all of my work stuff. Obviously, I have to vet it with the CEO and the co-founders if they're like what their AI policy is. But I'm assuming they're going to be good with it because it's going to be a startup. And if they are good with it, of course, I've already written up like an entire scoping document on how we're going to approach this. I'm really excited about that.
That's cool, man. I love seeing what you've been using that for.
Dude, I have like a Trello board and I've like built like 5 or 6 apps already at different stages. And I'm like working on like I haven't done any updates to Paper Panda in like a while. I did some Alpha Ledger work and oh boy, it looks good. I made a page where it's basically like it's like a command center that it helps me plan out all of my options trades. It's like, hey, this has this delta and this probability of return and this risk. And for the same amount of money, you can actually do this other thing instead. And this is your likelihood of actually being successful versus not. I did, and then you saw Newsroom. Newsroom is helping me. Like I'll share Newsroom for a second. So like this is Newsroom. I built it to follow, my stocks. I also can follow other, positions here. This has how many sources? A gazillion freaking sources of news. So whenever something happens, whenever there's a different type of event, I get this. This is like my own little like news Bloomberg-y thing. So me and Claude have been building that. That's just for me though. So anyways, it's really cool just diving in really deep on the AI side of things. And I think it makes me more employable. And if not more employable, then definitely more self-sufficient.
For sure, more employable.
Yeah. Okay. That was a little bit more than that question demanded. But what's
Um,
after hours?
yeah, silver is up 5% today, up another 1.87 well, a little bit more actually. Yeah, boy. I guess I don't know. It's just speculation, I think. It's up 17% from Monday. I guess they had good earnings. I'm just kidding. It's silver. I have no idea other than speculation.
Yeah. What stock that you want to own is not coming down enough to enter, and what is the entry price? Yeah, I think this is the perfect time for you to talk about Cloudflare, Roy.
Yeah, Cloudflare. The hard thing with Cloudflare is it got down. I had to double check to 158.83, actually a couple of times over the month of February, and I just didn't have money at the time. I was buying and focused on other things. Like, let me get some Nebius instead, which worked out really well. But I don't mind buying it at 150, but I have to have money. and like I could sell other things, but my conviction is not like at 150 I'd be doing that. Plus, there's like with Micron, for instance, there's just stupid valuation and buys out there. So it's hard in the current environment to say. But yeah, 150 still pristine valuation. If you look at SaaS names and Cloudflare's lumped in there, they're usually number 2 or number 3 most expensive by most multiples that you look at. Palantir, of course, is number 1. And there's some others that trade for number 2 and number 3. CrowdStrike oftentimes is up there too. But yeah, that's the only I've got. So I've got this short watch list of names that I've done enough research in that I'm wanting to follow or potentially get in. But out of all those, so I have Mosaic, which is a fertilizer company that I think is, if this conflict lasts a long time, like they're pretty well positioned. I didn't get in, but they're up quite a bit. I just added them on the radar. I did some research with them 2 days ago. They're 23, now they're 25. Wix, of course, Circle is interesting to me. I don't know that I'll get into Circle. Rivian, probably not going to get in, but I do keep it on the radar. Accelera, like I've done enough due diligence on these. I like the names, but they'd have to really be trading at a severe disconnect. Rocket Lab is another one that I missed, but I wouldn't mind getting in a certain price. Coinbase, and then, but the real one on there, the only one that's left, because I used to be like, oh yeah, Nebius, I do want to get back into that, and I want to have it. Well, the market gave that gift. VG, the market gave that gift. There's one that I'm missing that I added this year too that I got into. Figure, I was like, it just ran. Market gave it again as a gift in the 20s. I'm like, okay. So will it give Cloudflare as a gift? Probably not. But man, the price that would actually like be so compelling that I'd have to sell things is probably 120. Still expensive valuation, but like they have quite a moat. I'm being too long. I'll be quicker. We're 2 hours in.
Yeah, no, you're fine. Yeah, I would echo a lot of those companies, quite frankly. I don't feel very comfortable in my portfolio. Like I don't feel fully built out in the things that I want to be fully built out. And by that same token, like I still want to own new things that I don't have in my portfolio. Like I've been procrastinating on buying more Robinhood, which is something that I talked about earlier this stream. And that's just a byproduct of like, I don't feel comfortable cutting my winners and the sells that I have made are as a result of covered calls that I've gotten called away. And I'm now in tax season and I'm realizing that I have to pay a bunch of capital gains taxes. So that's also not fun. So it's I think that's going to change with the next like market rally up. I'm going to reposition in a couple of ways, but like largely I positioned defensively back in November and December. Like I bought a ton of Meta, I bought a ton of Amazon, and I think that's what's cushioned my portfolio a little bit. Like I could absolutely sell both of those for pretty much what I bought them at because they've been flat, and I could buy some more aggressive stuff. But I don't necessarily know that I want to do that right now, even though I think we are on the other side of this pullback.
Yeah, no, I agree. It's hard. Like too many opportunities 6 months ago, too few.
That's exactly it. How will EU energy deal on Thursday affect Fiji? Sorry, did you have anything else to say on that?
No. That's a really good question. Trump gave an ultimatum. Is it Thursday? Double check that. I don't remember what day, but I think it was for this week. I thought it was Friday, but anyway, doesn't matter. Of using LNG and using the position that, frankly, he's created for Europe, which it's wrong. But of saying, okay, you're wanting to back out of these trade agreements that we've made now because of the Supreme Court's decision. So I have other levels to play. This is one of them. He said, essentially, not exactly like this, but the stream of LNG from the United States is not going to be immediately cut off, but it may be curtailed. There may be there's a lot of possibilities that's out there. I think it's probably a taco type of situation, and the reason why I say that, if you look at one of the things that Trump is focused on, he's focused on like way too many things at the same time, has been the trade deficit. One of the things that has helped tremendously with the trade deficit is United States oil production, and by oil I also mean LNG. If they suddenly say, "Hey, no deal," VG and others can sell longer and go to the Japanese and Korean markets, the JKM. So like they're not going to fall off a cliff, but that is bearish. Like if he does do an NVIDIA type of treatment, but with LNG towards Cheniere, towards in the future next, towards VG, it's not great. I think it's unlikely.
Yeah, if any one of us, the two of us, would know, it would be you. So definitely going to trust your word on that. I know Matt put out a video on LNG, which I bookmarked to watch on my flight.
Yeah, I gotta watch that. Like he is actually in the field, and he is brilliant. He's the guy that I lean on when I have questions on VG and LNG and like what's happening in the space. Like, hey Matt, let me pick your brain.
Absolutely.
And he usually just tells me it's all going to zero. So, but yeah, he's White House quant.
Yeah, he is sarcastic man. Let's put it that way.
Matt Money, if you guys are looking for him. Yeah.
Only 15 million ETH on retail exchanges available.
So
this guy's ready.
I pulled this up. No, I saw that question. And I was like, yeah, let me check on it. I've not checked on it in like 2 or 3 weeks. So this blue line here is the exchange volume. We can see a meaningful shift when so many digital asset treasuries, especially BMNR, came online. What's really interesting, Tevis, I don't know why exactly, and I need to look into this. There has been a tremendous drop on exchange reserves from 15.8 billion in a single day down to 15 billion. Like if, again, we're looking at all time, it's hard to see, but there's this little line here. That's one of the steepest drops ever. Maybe one of you guys know why that happened. That's really intriguing. It's going to take a while before we actually see getting to the point where there is a lot of scarcity there. 15 billion is still a lot. But, maybe 2 or 3 years out, we start seeing that there is a supply crunch, which tends to help the price quite a bit. There's a lot of buying pressure, a lot of institutions as well. Of course, BMNR is a big part of it. So that drop, though, man, I actually need to write that down. I don't want to forget that, man. That's crazy. I think it might be the biggest drop in a day ever.
Yeah, but the exchange reserves are at levels where they haven't been for the last decade. So the last time they were at these levels was like 2014, 2015, something like that, if I remember correctly.
I don't think that's correct. I think this is the lowest ever.
Well, sure. But okay, sure. This is the lowest ever. If it is, then that's bullish, of course. We know Ethereum took a very, very quick run up to 2,300 and then started to pull back. And like this thing, man, when it wants to run, it can just run very quickly. So something to keep in mind as the exchange reserves, and like the exchange reserves being where they are, definitely add fuel to that fire. So
over time, yeah.
Roy, are you doing anything to profit off of VG volatility, the IV spike? I sold some 25 calls expiring Jan 2027. Holy. Wondering if you're doing anything similar.
I don't really want to sell shares. Like long term, I still think VG is a good buy here, like even ignoring the Hormuz stuff. I don't want to make my answer too long. There's some on both sides, but essentially what I've done is I've taken profits off of leaps. When I see a stock that has a decent enough options chain, and I believe it's trading at a severe disconnect of where it should be in the next year or two, I tend to buy a lot of shares and then some leaps as well. Not take profit too much on shares, but I do on the leaps. Like that's how I do. So I still have like some SoFi $10 strike leaps that are up immensely because I was buying those when SoFi was like $6 or $7. So VG, I was doing the same thing. I've taken some profit there. I did sell some covered calls now that there's weekly chains available for this at I think $20, but not many, not my full position. Mostly, I've not even sold covered calls on them because the price is very volatile, and if the Hormuz situation continues to persist, like we can see stupid prices of VG, which will actually cause me to get out of my position entirely and just put it in something else. But yeah, long term, it's still a decent buy here.
I think writing $25 calls for January is crazy because like it's amazing, but you're also locking up your capital for so long, unless you're like really riding the IV and then you're selling that for pennies on the dollar next week. But anyways, to each their own. How Webull? At some point, you guys were shareholders. Now it's way cheaper but stronger. Yeah, I think we both sold our shares when they made that agreement with I forget the name, but
Yeah.
basically they made an agreement with a shady organization that had a bad reputation for deals of that nature, and so we both sold out because it smelled pretty fishy. And yeah, it's lower now. I'm not surprised. So I haven't really looked at Webull ever since, but the thought process there was like, well, if they didn't really need the money, then why would you make a deal with this organization that has been proven in the past to be like a short seller of the underlying shares? Like they'll give the money and then sell the shares short and eventually buy them back, and that's how they fund it. It was way too in the gray area for me to like it. And even though I like the underlying product and I like the underlying growth, I think that deal structure was the thing that turned me off. I forget who the company. I want to say like Lordstown something, but I know that's wrong.
Sounds right, actually. But anyway, yeah, like the same. There's too many opportunities, and that made me trust management less. And if I feel like I can't really trust management or I have questions, I tend to not invest.
Mm-hmm. Yeah. Okay, so let's move on to the next question. Wouldn't Tesla issue 1.5 trillion worth of shares to merge with SpaceX? They might honestly just create a new entity altogether and then have some type of conversion between SpaceX and Tesla shares for that new entity, in which case the actual ticker symbol would change. I'm not sure how they would go about it. I know they have several options for what they could potentially do.
Yeah.
Everyone, whenever I see SoFi drop 20 to 30%, people start talking about how they're cooking the books before muddy waters. I saw this narrative many times, Franzi says. Yeah, I mean, the market is emotional, right? When SoFi's at all-time highs, they think it's going to go to 50, and when SoFi's at 16, they think it's going to go to 0. Just got to roll with the punches.
Yorkville Advisors. Thank you, K-Doc.
Yeah. Yorkville. Next question. Dude, these shows go long. Didn't CrowdStrike get dinged because Databricks said something about getting into security? I'm not sure. I'm not Google.
Not from Databricks, but ChatGPT and Anthropic. Well, it was Anthropic originally, but yeah. I think it was silly, but yeah, I'm far from an expert in cybersecurity, which is one of the reasons why I've never gotten in.
How How is the market pricing Chime to SoFi? Seems like SoFi is a rented mule, just getting beaten down.
Yeah,
I don't know what
I'm
Chime's.
not following Chime like that closely. We've talked about SoFi already, but yeah, a lot of payment names are in that same bucket.
Yeah.
Payment and fintech. Financials are actually the worst performing sector of the S&P 500 this year so far.
At what price would we consider buying HIMS again?
I'm not sure.
I don't know. What's that?
Yeah, I'm not sure. I'd probably have to see another couple of earnings. So more than price, I'd need to see execution and time.
It's a good answer. I agree with that answer. Do you like Figure Technologies? They have a lending platform built on blockchain. Yeah, I mean, Roy's been talking about them. He's going to do a Stock Tank episode on them at some point. So we'll see.
Yeah, I don't think I've done any YouTube videos yet, but on X, I posted quite a bit about them. I've been talking about them since the IPO. Wanted to get in, finally got in. It's not a huge position. It's probably like a 2 or 3% weighting, so I'd love to add to it. And I don't think it's a bad valuation here, but there's some overhang on it just because it is a crypto name. The market's like, oh, crypto. So crypto's going down, must be bad for them. Well, it's wrong. Like, it doesn't understand. A little bit of truth to that just because they do have some crypto-backed loans. The bigger concern for me is like what's happening with the private equity stuff, not equity, credit, with what they're trying to do as far as a couple of their platforms. So Democratized Prime and I forget the name of it. It starts with the D. I'm like trying to figure out, is what's happening there going to actually fuel this? Because they are trying to basically open up the private credit opportunity towards retail and other investors. So, they're kind of like SoFi and Robinhood as well. Like, let's democratize all these products and give access. But yeah, they extreme efficiency because of what they built with the blockchain, asset light revenue, really innovative, really good company. Some of the stuff that they've launched, like the on-chain private equity network, I'm very skeptical of. I don't think it's going to go anywhere. Would love to be wrong, kind of. But yeah, there's enough there, like what they're doing. It's like, it's pretty clear. It's a great company, positioned very well.
How many companies do you guys prefer to have in your profile? I think it really depends on how big your portfolio is. I would say generally under 10.
Yeah, I have 10. And then I have Micron in the swing bucket, but I don't count swing stuff. And it's not a long-term private position.
Yeah, Jonathan Price, I think you need to follow Roy more because he's been talking about Mike Cagney and the entire team there at Figure. So great resource.
I need to confirm and double check, but I may be doing an interview with somebody from Figure over the next month or two. We'll have to see where things fall.
Okay, we read that. Why is Micron pumping in the after hours, Roy?
I'm not really sure. I guess it's because we talked about it and people are just buying. So
just the market.
It's stupidly mispriced. Like, and so if people, if what's happening in the Middle East seems like that there's at least going to be a time for people to catch their breath. I mean, a lot of these names, not just Micron, are probably going to go up.
Yeah. Yeah. Agreed. All right. Next question. What's your top 3 picks for the year? Top 3 picks for the year.
Well, at the beginning of the year, I said Air Test Systems, which is done really well. Figure, FIGR, was my second pick. And it went off to the races at $70. I'm like, wow, it's doing even better. It's now trading at 35. So I think it's up a little bit this year. Maybe it's flat, but I still think it's going to have a good year. There's a lot of names. It's hard. I don't know about the third. I'd have to think about it.
I'd have to say Nebius.
Ooh, good one. That's actually a really good one.
I think Nebius in their build-out phase, I think the market's going to start to realize towards the second half of the year that like a lot of the revenue is going to start to flow in 2027, especially from their new data centers. Second one, just going off of gut, I want to say Amazon. I think that the OpenAI and Anthropic IPO news is going to heat up towards the second half of the year. And I think that the market will start to warm to Amazon, and especially where it's at now at $210. It's going to seem like a steal of a deal. Then I don't know about number three.
Yeah, on Amazon, like the reason why I don't think it will is because of the CapEx stuff. There's CapEx concerns. The market is really focused on it. I think it'll take a while for the market to understand like CapEx spend is not necessarily bearish if it's done well. And Amazon has done well on that. So, but
Yeah.
my guess is it takes a little while.
I think for the third pick, I would say Lemonade. I think Lemonade can actually do some really big things. Their recent earnings was the best that they've had in company history, at least in my opinion. I think they're getting really close to the inflection point for the market to see them. With the deal with Tesla that they had, I think it's huge, and they're not getting. I think they're due to get repriced ever since they came. Like they were at $100 almost, and then they came back down to 50, and now they're at 65. I do think that they're going to be a triple-digit stock by the end of this year.
Yeah, Lewis Roy says, "What about SoFi? No top three pick." Like that's the hard thing is 2 out of 3 things that are impacting severely SoFi's price are beyond their control, and they can't do anything about it at all. And it's hard for me to say like my obviously the price target that I had is assuming bull market was intact, and I didn't mean like I should have qualified. Like there are times when whatever sector, and this has been fintech and financials, falls out of favor. Eventually that'll change. That doesn't last forever. Same with software, but yeah, it's hard to say. I think that we end the year higher. I do think I see the S&P 500 question. I do think that they get in, but they need to have enough market cap to do so. So there's a whole lot of catalysts still for SoFi, and they're growing rapidly. But the market might continue to disrespect it for the year. I don't know.
Yeah. I think this is a big catalyst for SoFi in the second half of the year. Like if they get it in June or if they get it in September, that can obviously help their chances of climbing higher. But generally speaking, companies that do get into the S&P, like it's not going to be an immediate move higher, because that volume will start to come in over months, and you're going to see the move be like spread out over several quarters. That's what happened with Robinhood. That's what happened with Palantir. It's what happened with Tesla. It's what happened with pretty much every company that I can remember that got into the S&P.
Yeah, especially when it's heavily retail owned. I don't want to get too deep into it.
All right, we are 2.5 hours into the show, and we're through the questions. So people are either tired of us or we're tired of answering their questions.
Yeah, I think that's probably a wrap right there. I want to thank you guys for joining us here for Bootleg Weekly. It is a much more fun and better show with you guys in it and involved with the Q&A period. Thank you again for those that donated. Thank you for those that are members. And guys, thank you just for viewing. If you don't mind I normally don't ask for this, but if you don't mind putting a like on Tevis's or mine, that does help the algorithm a little bit, just so other people can view it. And thank you guys, as always. Good questions tonight, especially good questions.
See you next
Friday. Should be there on Friday. Friday 2 weeks from now, I think I have to be gone, but yeah.
No, don't leave. We have to leave, but we will be back. We will be back on Friday and then next Tuesday. Thank you all so much. And maybe next time we talk, we will have had peace in the world. Don't hold your breath, but just maybe. See you now.